share it with you guys. Um, Not completely, not in its entirety, but just the gist of it. Um, and I think that this is pretty cool for you new people. I want to talk about it while we get everyone in here. Um, when I first started learning the software, I'm gonna start the week with the boring Mark stories. When I first started learning the software, good morning, Tony. Most of you know this. My last name is Novak, right? My last name is Novak. My brother wrote the software. He owns a company. And I really thought that because of that, it was going to be easy for me. I thought that I was going to jump in and I was going to be a millionaire within the first year. And that would, I kid you not, that was my plan. Um, and then, of course, I realized that it takes some study, that it takes a little time, that it takes some effort. Um, and the conversation that I was having offline was, while I understand the premise of the rules, it's difficult to see it real time. Um, and I'm here to tell everybody in the room because, guys, these are the things that I forget to say sometimes. I'm here to tell everybody in the room that that's normal. The market moves all the time. The market goes up, the market goes down. These patterns repeat themselves, and these patterns get close to being true, and sometimes they're not true, and sometimes they are true. But what you're doing is you're taking in all of this information that you're trying to separate in your brain. You're trying to divide it into these three parts that create a trade. And it's normal that you're going to miss a few in the beginning. And that's why we talk about how to study, how to go back and look at it. And I'm going to tell you right now, guys, the key to recognition in the moment is just repetition. Seeing the same patterns over and over and over. Good morning, Alan. Good morning, Dano and Ron. Um, the key to slowing the market down, the key to recognizing these trades before they happen is just repetition, it's experience. And guys, that's the one thing that Nexgen can't give you. I'm going to give you a set of rules this morning that have been proven to win more than they lose. I'm going to give you a set of patterns that are recognizable, but it'll take some time to get there. And I want you to give yourself a little bit of grace. I want you to allow yourself to be a student. I want you to just wake up and write it down on the piece of paper in front of you and say, hey, I'm new. And because I'm new, I'm not going to be great at this in the beginning. I bet if we asked all of you, show of hands, in your professional life, you're probably a badass, right? You're at the top of the chain. You understand. You have all the answers to the questions, right? Because you spent 10, 15, 20 years getting there. I was in the exact same position. So it was a mind adjust to go ahead and get my brain back to being a student. So give yourself just a little bit of time, guys. I promise we're going to get there. Each and every one of you is going to get there if you do the work. Um, so let's do the work. Let's get into the day, guys. Let's start by going to forexfactory.com. Good morning, Dr. P. And we just check news. Every morning we check news, not because we're worried about what the news is. Guys, it doesn't matter what they say. The idea is that news can create a reaction. News can create a spike, a jump, a bump. It can make things reverse. It can make things trade too fast to recognize patterns. So every morning I go to forexfactory.com and I'm looking for these medium impact, I'm looking for these high impact. And today is Monday, September 25th, and there's really nothing until 6 p.m., which means that there's no red flags for me. There's nothing that says the market may go just a little bit wacky. So I'm not worried about it. I'm going to trade. I'm going to look for my patterns today. Tomorrow morning at 10 a.m., I've got this big red flag, CB consumer confidence. I hate to admit this to the class, but I'm going to do it. I don't know what CB consumer confidence is. I'm assuming it has something to do with a bunch of truckers that buy CDs or CBs and how they feel about them. And I don't know why that would move the market, right? But I do know that because it is a high impact news, it may move the market. And guys, I do know that it's not about truckers and CBs. But I don't understand it. I don't need to. All I need to know is that the reaction is there. So, guys, make sure that you're doing this because everything we do revolves around reactions, to be honest with you. Letting the people that move the market, and then we're going to get in, we're going to take advantage of it. Everything that I talk about each and every day comes from the tutorial section, guys. The tutorial section is nothing more than your how-to. It's your, hey, This is what we're doing. This is how you're going to do it. Um, breaker, breaker. And then I'm going to remind you guys once again, I've got 20 of you in here. And guys, I don't see a lot of new names, but I see a couple that are still pretty new. Hey, Chef, good morning. Um, the step-by-step path to becoming a confident trader ASAP. Not today, not tomorrow, but ASAP. Hey, good morning, George. It starts with posting your trades in class, guys. The more pictures that you post in class, the easier this pattern recognition becomes, right? So we go back to that mark. I don't see it in the moment. I can see it fine historically. That's great. Guys, the more times you take pictures of these patterns, the more pictures you take of your charts, the faster recognition comes in. And then using your real-time performance in a spreadsheet, guys, making sure that you're tracking everything that you do so that you can go back and study it. So it starts with taking a picture. And this is how, hey, good morning, David B. This is how I want you guys to mark up your pictures. I want you to write your rules on the chart. I want you to have arrows drawn to the rules. And all we're doing by drawing these arrows to the rules, guys, is we're solidifying the look with the rules to increase consistency. Friday, we had a lot of people decide that they didn't need to write their rules on the charts, and what they were doing is they were breaking their rules. And when we slowed it down, when we took a deep breath and we wrote rules on their charts, suddenly the reason that their trades had problems became very evident. So I want you to get in the habit. Write your rules on the chart, guys. Write exactly why you got in and why you got out. And then when you present that to me, we're going to have an awesome one-on-one. You and I are going to have a private session in front of the rest of the classroom, but we're going to talk about the advantages. We're going to talk about the disadvantages. We're going to look for the things that you've done well, and then we're also going to look for the things that you could do better. And that's my goal, is every day we take one step closer. Good morning, Snorri. Make sure that you show me your large and your small charts. Don't just show me one chart. Give me both. Tell me all the information. Show your timestamps and your prices so that I can line things up. It makes it easier for me to line things up. If you forget number 3 here, guys, I need to see your entries. I need to see where you're entering the market. I need to know why you're entering the market. But you can either circle your entries if you're using an annotation tool, or even easier, you can right click on your entry chart, guys, go to your data series, and you'll be able to plot your executions, your text and marker, and this makes it easy for me to see exactly where you got in and what you're doing. Um, and this is kind of your roadmap for annotation. That's the first half, guys, and I'm telling you right now, commit to taking 15 to 20 pictures a day. Commit to taking and annotating 15 to 20 pictures a day, and life is going to get easy for you. It's going to get simple for you. And then track your performance in a real time, or your real time performance in the spreadsheet. Good morning, Cream White. Oop. And then John, thank you. Scam warning. Guys, if you ever get one of these, it's a scam. Just so you know. All right, we're going to use the spreadsheet. That's the second half. Using the spreadsheet. And guys, all it is a trade journal. All your spreadsheet is a trade journal. It's you taking the time to take what you've done and put it into a spreadsheet so that you can come back and study it. And again, the idea is to increase recognition, right? So everything that you do today, everything that you did on Friday goes into the spreadsheet. Every trade you took, Chef just put a picture in the room, right? So Chef's picture is taking forever to come up. Let's try it again. So Chef's picture, bum, 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 awkward pause, is talking about his rules. It's talking about them being met. It's talking about whether or not they're termination conditions, asking questions, where he took the trade. And then Chef's going to get great feedback on that. And after the feedback, Chef's going to be able to come through and put that picture into a spreadsheet. This was his trade. This is what he did. This is why he did it. And this was the result. And his notes are going to help him identify any challenges that he had. He's going to be able to write down all the advantages that he had. But what he's going to do is Chef's going to come back tomorrow morning and he's going to set aside 5 minutes. 5 minutes to look at every trade that he takes today. 5 minutes to look at the advantages being met. 5 minutes to look at the disadvantages. 5 minutes to review the feedback. And he's going to prepare himself each day. He's going to accelerate the learning. The recognition becomes easier through this simple little study process each and every morning. So guys, use your spreadsheet. And if you need help with the spreadsheet, I want you to let me know. But if you handle your part, taking pictures, putting them in the room, using the spreadsheet, I'm going to handle my part. And my part is to teach you the trigger line and Fibonacci rules for when it's okay to trade, because that's what you've got to learn first. You've got to learn the rules, and you've got to be able to associate these rules with the picture of them being met. I want you to simulate. Don't wait until you think you have it down. Simulate every day. Get in there and make a mess of things, guys. Break every rule and post that picture so that we can talk about the rules, so we can talk about the advantages. We can go back to the study guide and look at what the rules look like to be met. And the idea is we don't want you to post, or we don't want you practicing the wrong trades. Practice the correct trades. You're going to break the rules at first just through an understanding, but um, make your focus make your focus on practicing the correct rules, because there's nothing more damaging than being rewarded for bad behavior. There's nothing more damaging than getting so lucky with a winner, even though all the rules are broken, because what it does is it encourages you to break your rules in the future, and your luck does run out. We're going to simplify a lot today, guys. We're going to focus on what's called a high probability trend trade this morning. And a high probability trend trade is a trade that it typically wins 70 to 80% of the time. Good morning, D-Rock. The high probability trend trade is only 3 rules, and we're going to focus on these 3 rules for the first hour of class this morning. These 3 rules for the high probability trend trade, that trade that typically wins 70 to 80% of the time, create 3 advantages. And it's these advantages that really create the trade. We're not looking for trades, we're looking for advantages, and when they're met, we'll pull the trigger. A trade is nothing more than momentum, a clear path, and an entry area. That's all it is, guys. 3 very simple concepts. This high probability trend trade is made up of 3 very simple rules: strong triggers, no terminations, and then identifying your entry. And these 3 rules happen on only 2 charts. Simplicity is the key to success. I can't stress that enough. In the 2 chart process, you're going to have a large chart and a small chart. Your large chart is going to define direction, momentum, and areas. Your large chart is like a broad stroke of a brush, guys. It only takes 1 bar, the most current bar, to define these 3 things: direction, momentum, and areas. Your first 2 rules for a high probability trend trade must be met on a large chart. You will have momentum and you will have a clear path if you embrace the idea that it's simple, that it has to be met on the large chart. Once you have them, then you'll turn your attention to a small chart. And a small chart is just refining a broad stroke of that brush, guys. It is going to pinpoint the area where you are going to enter, and that's what rule number 3 does for you. It creates recognition of the area where the market is most likely to continue. And we focus on the high probability trend trade. And guys, I'm telling you, my first hour is a broken record. My first hour is the same thing every day of every week. Because when you understand these 3 concepts of a high probability trend trade, when you really focus on nothing more than the entries for 20 days, it's going to teach you to read your charts. You will become a chart reader. And chart readers have the ability to recognize 3 very key concepts, guys. Where the market is likely to continue. These continuation points become your entry for the high probability trend trade, but even more so, being able to recognize where the market is likely to continue becomes your tool to find entries for trades beyond the high probability trend trade. You're going to understand where the market is likely to go, and this is going to allow you to eventually make great decisions on targets using momentum, using Fibonacci. And then finally, where the market is likely to stop, guys. And this, in my opinion, is the most important concept, because areas where the market is likely to stop is what we call a termination condition. And termination conditions very often are going to be these Fibonacci areas that the software provides. It's going to be those yellow 1-to-1s. But guys, these termination conditions are where the people that move the market are making decisions. It's where they're getting out of positions. It's where they're adding on to positions. It's where they're taking counter trade positions, guys. And when you recognize where the market is likely to stop, what you're going to find is it's going to keep you out of a tremendous amount of trades that aren't going to work. And even more so, these termination conditions, if they reverse the market, become the anchor for the highest probability trend trade that you can take. When the market reverses at one of these key areas, we're going to look for the high probability trend trade that happens right after, and this is your best chance of success. This is a trade that typically wins 70 to 80% of the time. And this will be your first 20 days as a brand new user. Just give me 20 days. That's all I ask. And I know that feels like eternity, right? But none of you figured out your career in the first week. Don't try to do it here. Give me 20 days focusing on where to get into the market where it's most likely to continue. And if you do this, great entries create manageable trades. You'll be able to identify advantages that'll take you beyond the high probability trend trade. And guys, you're going to become a chart reader. And becoming a chart reader is such an important thing. So we're going to start and we're going to look at the large chart. And your large chart must have strong trigger lines. This is rule number one. Because when you have strong trigger lines, the first advantage is in place. The first third is there. And you can't have strong trigger lines if you're not trading with the trend. So your first lesson and your easiest lesson with Nexgen is identifying the trend. And if the background is green on your large chart, you're in an uptrend. You should only be looking for rules to be met for high probability trend trades long, for buying the market. If the background on your large chart is red, you're in a downtrend. And you're only looking for rules to be met for high probability trend trade short, guys, to sell the market. And let me show you how simple this can be. I've got so much open. This is the NASDAQ. Are we in an uptrend or are we in a downtrend? Guys, help me out here. My background is green. We're in an uptrend. And I'm only looking for rules to be met for high probability trend trades long. Guys, and it is that simple. Here's your S&P, uptrend or downtrend. I'm going to tell you right now, you guys that are playing along, you're the people that are going to get to where you want to be the fastest. Those of you sitting on the sidelines, too cool to answer, and now up, perfect, chef. You're going to miss out a little bit, and there's that uptrend going on in crude oil. It doesn't mean that there is a trade. It doesn't mean that the rules are met for a trade, but at least I can train my brain to never fight that trend, and never go against what the people who move the market are making happen. And then once I identify it, I have to have strong triggers. This is rule number one, guys. This is the one that creates the advantage of momentum. Strong triggers on your large chart means that your small triggers, these solid lines, have broken above and away from your large trigger lines. It's the space created between the two. This lets me know that the odds are favorable for the market to continue up, to continue in the direction of the trend. From the point of separation until they return. Guys, this is where we're going to look for that high probability trend trade. Notice that it doesn't happen here at the bottom, nor does it happen at the top. So Nexgen users, we are going to embrace the idea that these strong trigger lines give us an advantage. This is going to be the precursor for every trade that you take as a new user. That separation is like scissors opening up, preparing to cut. You can't cut if the scissors aren't open. All you can do is stab, and taking a stab at something isn't a very logical way to take a trade. So in an uptrend, when I have the separation, this is when it is most advantageous to buy a pullback to Fibonacci support on a smaller, faster chart, because the market is likely to continue in the direction of the trend. You're going to see this pullback. On a large chart, it's going to look like a tail. Guys, this is after the fact. This tail happens when the market is already on its way there, but you will be able to pinpoint right where that tail is likely to happen by using a smaller, faster chart. In a downtrend, when the smalls are separated from the large, when they're both wide angled in the direction of the trend, open like scissors, this is your strong trigger look. This is when the odds are favorable for the market to continue down, and this is when it is most advantageous to sell a pullback to Fibonacci resistance. Once again, you're going to see these tails after the fact, but Nexgen users can identify right where that tail is most likely to form, and this becomes your point where the market is likely to continue. So I'm going to ask the room, strong trigger lines. Smalls are above the large are wide, they're angled in the direction of the trend. Do I have that look on crude oil right now in the moment in this uptrend? What do you think, guys? There's my separation. One bar telling me that we're in an uptrend, one bar telling me that we have odds favorable momentum. And that's the look. If you don't have the separation, you don't have the look. And I want you to embrace the idea. This is what it looks like. Look at that odds favorable momentum all the way up. Smalls above the large are wide, they're strong, they're in the direction of the trade. One bar has defined trend, one bar has defined momentum. Give me a Y in the room if you're comfortable, guys. Once again, smalls above the large are wide, they're angled in the direction of the trend. One bar in the moment defines your trend. One bar defines your momentum. But once again, it doesn't mean that we have a trade yet. Right, D-Rock? You see it. All it means is that rule number one is met. The idea that we have strong triggers creating the advantage of a market that's likely to continue in the direction of the trend. So the opposite of strong is weak. Weak triggers mean that those small triggers have returned to the large triggers, that the shark has closed its mouth, that the scissors have shut themselves. However you want to look at it. But when my small triggers work their way back to and inside of the large triggers, I've lost momentum, guys. I go from strong, odds favorable to anything can happen up or down. And when anything can happen up or down, I lose the advantage. And if I've lost the advantage, I'm simply going to stop and I'm going to sit on my hands and I'm going to wait for that advantage to return. So strong triggers, weak triggers. I want you guys to steal this picture and I don't want you to overthink it. It really can be that simple. And odds favorable momentum is not going to happen every second of every day. You may have odds favorable momentum pushing the market down, and you'll notice that the triggers work their way back in. I want you to embrace the idea that when the advantage goes away, you're just going to sit on your hands. 90% of your day is spent reading indicators, 10% of your day is taking trades based on those advantages. Weak triggers, anything can happen triggers, ACH, precede the reversal. The reversal gives me that giddy up, those strong triggers, that best of the best look, odds favorable momentum. There's one of those tails. On a smaller, faster chart, you guys are going to know exactly where that tail is likely to form, and it becomes your entry for that highest probability trend trade. Ultimately, the triggers weaken themselves again. There's a reversal once again. Guys, scroll back on your charts and look at how many times the market reverses with weak triggers. It creates odds favorable. Again, there's one of those tails giving you the push. And then the fight starts, guys. The fight that you can't control. There are forces that move the market, that make it go up, that make it go down, buyers and sellers. Guys, when those forces don't agree, your trigger lines won't agree. Your trend may be up, but your triggers may be down. Your large triggers may be down, but your small triggers are up. This indecision is a fight that you don't have to be a part of. This indecision means that the people that create trends and momentum can't win. They're fighting. They can't win. This is where new users, this is where experienced traders even get caught up in what we call consolidation. And consolidation means that nobody can make a decision. So if you take a trade, you're trying to predict. You're trying to get in without advantages. Next-gen users, you have the advantage of rule number one to keep you from getting caught in this fight. And if you sit on the sidelines, go pour a cup of coffee, grab a water, pet the dog, do something other than try to make a prediction, you're going to keep the powder dry, right? And just wait for that odds favorable momentum to return. You're going to see that anything can happen triggers quite a bit, caught in between fibs. From resistance to support to resistance, the triggers don't agree. There's no reason to get caught in it, guys. That's the S&P happening right there. So rule number one is in place. You have strong triggers. This should start everything for you. And I'm going to tell you, strong triggers cover a lot of mistakes. Rule number two, also on the large chart, says termination conditions must be false. So you have to have room to your profit targets. So we're going to go through and I'm going to go and we're going to talk about what a termination condition looks like and what a termination condition is. It really is just an area that may reverse the market. How easy is that? What's a termination? It's an area that may reverse the market. It can be divergence highs, divergence lows. It can be red Fibonacci resistance, blue Fibonacci support, or it could be these yellow one-to-ones. Guys, these are areas where the people that move the market make decisions. I'm going to share this. Ron's going to love this. This is Norbert. Understanding our place in the market makes it easier to respect termination conditions, guys. Sharks are the big money investors. Sharks move the market. Sharks create the trend. Sharks create the momentum. And sharks react to these key areas, to fibs, divergence highs, yellow one-to-ones. We can be remoras. John Novak told me once, stop showing that picture. It makes us sound like bottom feeders. We're not bottom feeders, guys. We are advantage seekers. And when this guy says it's time to go, we're a remora and we're going to get paid, right? We're going to take advantage of all their hard work and we're going to take a snippet, guys. And there's the guy that tried to be first. He's going in the mouth. But I love showing this picture because it reminds us that we're not in control of the market. We never have been. We never will be. So these guys react to these areas, guys, and I'm going to show you another picture that I took this morning from the market. Decisions are made at fibs. Decisions are made at fibs. Next-gen users take advantage in between those areas where the decisions are made, and we do that by identifying termination conditions, by looking at these lines and deciding whether or not they're likely to stop the market. And it's a two-part process in order to make that happen. Let's go to our first picture. Price reaches an area. When I say price, I mean these dynamic Renko bars. These dynamic bars are nothing more than a reflection of price. And if you go to the live market, this first bar shows the most current price. This first bar shows the most current price. And here it is. Price has reached these one-to-ones. Price has reached Fibonacci resistance. All you have to do is ask yourself, where are my trigger lines? If my trigger lines remain below the areas that have been reached at resistance, these yellow one-to-ones say don't take a long trade. If price reaches support and the triggers don't break through, we're not taking a trade, guys. So let me go back through and we'll slow it down so it's not the live market. Price reaches Fibonacci support. Dynamic Renko bars reach that blue fib. The second price reaches it, where are my trigger lines? If they remain above support, if they remain below resistance, next-gen users, you have the advantage of knowing that this is an area where reactions may happen. Look at that giant reversal bar on the large chart after price reaches the area. And we go through the idea that price must reach the area because fibs, yellow one-to-ones, divergence highs and lows are where the reactions happen. The reaction happens to price reaching. So there it is at a low. Sometimes price comes down, gets through the areas, creates one of these divergence lows. This line is not a termination condition because price didn't reach this line. Price creates this line. It's when price returns to the divergence low, all you have to do is ask yourself where are the triggers. And if they remain above, this is a termination condition. This is an area that may stop the market. Price may extend a little bit, right? But the triggers stay above. This is what we call a pivot stop out of a prior divergence, guys. A PSO is how you're going to see it on charts. If this termination condition is created, no more short trades. If it reverses the market, we're going to call it a strong bottom. And the strong bottom is that precursor to the highest probability trend trade that you can take. Those pivot stop outs are really powerful. They become more powerful still when they happen with Fibonacci resistance or support. And I'm going to take this picture right here, and we're going to go through the idea that 90% of what you do is reading your indicators. 90% is making sure that you have odds favorable momentum, making sure that you have a clear path. And the buyers are in control. And they push all the way up to Fibonacci resistance. And when they reach Fibonacci resistance, when price reaches Fibonacci resistance, all you have to do is ask yourself, where are my trigger lines? If they remain below resistance, you've reached a termination condition. Guys, give me a why in the room, especially if you're brand new. If price makes it to one of these fibs and the triggers remain below, sit on your hands. Let's wait and see what the reaction is. In this case, the reaction was pushing the market all the way down to Fibonacci support. And when it reached Fibonacci support, absolutely none of the trigger lines made it through. So I know that I can't go long into resistance, and now I know that I can't go short into support. And this is frustrating for a lot of new users. Well, Mark, how on earth could I possibly make money if I keep hitting these stupid termination conditions? Well, these termination conditions kept you out of a losing long trade and a losing short trade. And then the market works its way back up to Fibonacci resistance. The triggers remain below, therefore, it's a termination condition. It reaches that divergence high and the triggers remain below, another termination condition. And then it reaches a second level of Fibonacci resistance and the triggers remain below, a third termination condition, all in the same spot. So what I've done is I've sat on my hands and I've waited for the advantages. I've waited for the advantage of momentum to be coupled with a clear path. This termination creates a full reversal, so it's a strong top. This reversal gives me small triggers below the large triggers, so now I have the advantage of momentum. And because price hasn't reached that key Fibonacci area, I also have a clear path. And there's one of those tails for your highest probability trend trade. For that trade that typically wins 70 to 80% of the time. All you had to do is sit through the nonsense. Let the deep pocket investors figure out which way they want to go. They'll tell you when it's time to go short because you'll have odds favorable momentum, because you'll have a clear path. And we see it going the other direction as well, guys. Even with the strongest trigger look we know, going into an area, if we reach it and the triggers remain above, no trade. Look at the bounce that happens off of those yellow one-to-ones. Look at the indecision, the ups, the downs, when the buyers and sellers fight right at this decision-making point. Ultimately, the buyers win. They reverse the market. Ultimately, the buyers give you smalls outside of the large. And there's one of those potential entries, that highest probability trend trade. So the recipe for a termination condition is pretty simple. If price reaches the area and both the small and the large remain below, it's going to be a termination condition. Let's see if we can find a couple examples. Price reaches support. The triggers didn't break. Look at the reaction to the top. It doesn't mean that the trend is over, but it means that next-gen users don't have to get caught in that reaction. Price reaches the divergence high. Even with odds favorable momentum, look at the reaction. And that's what we're doing, guys. We're staying out of the fight between buyers and sellers, and termination conditions are going to keep you safe. So if I can't trade into an area that price is reached and no triggers are broken, when is the area clear? It's really pretty simple. Let me go to one quick picture that's going to sum it up. An area is broken when the small and large get to the other side. That's the easiest way to say it, the most simple way to say it. If price reaches the area, these dynamic Renko bars come in contact with Fibonacci resistance, no more trades because the triggers are below. Guys, this is your safety mechanism. This is keeping you from driving your car into a brick wall. When both your small triggers and your large triggers get to the other side of resistance, now we consider the area to be broken. Now the path is clear. Now we're looking for the rules to be met for high probability trend trades. We're looking for that separation, smalls above the large. We're looking for that potential entry because the path is clear. And there's one of those tails taking you. Is everybody comfortable with that? Chef and D-Rock, you're the only people answering. I guess that's why you're finding so much success in the market right now. Price reaches, no triggers, no trade. Guys, sit on your hands and wait. Both the small and the large get to the other side of the area. The area is now broken. The path is clear. Guys, this is your best of the best. This is your highest chance of success. Remember, trading is about making money, guys, and you make money from advantages. There's one other look. Strong triggers, odds favorable momentum, guys, that can break areas. It keeps closing. So Lex, you're going to go to your documents folder, NinjaTrader 8 database, and you're going to get rid of cache and tick right in there. And this is the whole practices. Whoops, close that out. There we go. And that's going to help a lot. There you go. And hopefully that takes care of it. You can't open it all. So D-Rock, if you can't open it all, if you try to open it and it like crashes instantly, is that what it's doing? So you've got corrupt, something in your workspace is corrupt. So to fix that, it's a pain in the butt, but it really only takes about 5 minutes after you've done it once or twice. Whoops. Delete your old charts and templates. And this will literally take you about 2 minutes, D-Rock. Delete your old charts and templates, your workspaces, your chart templates. And then from there, go to the resources page and download the indicators. And just get all fresh workspaces on there. And 9 out of 10 times, that cures what ails you. I've had that happen before. And guys, we know that there's a couple challenges on NinjaTrader 8. John Novak has programmers working round the clock to get you guys taken care of. It's in the user guide. So I just put the link in there. There's the steps for deleting the old charts and templates. I'll put it in one more time for you. Is it blurry, David? Guys, is anyone else getting a blurry chart from me? Let me reboot it real quick. Hold on. All right. Is that better? I tried to slow it down a little bit. Much better? Cool. Yeah, guys, always tell me if there's challenges with my chart. Let me know, and I'll try to adjust things. And then D-Rock, that's just an easy way. So if you wake up and do it, and then it keeps you from waiting on Jason sometimes. Where were we? We were talking about termination conditions, weren't we? Guys, I know that you want to be in the market all the time. I know that you always want to be in a trade, right? But the reality is 90% of your day is spent waiting for advantages. No triggers, no trade. Both triggers, clear path. It's really that simple. And then there's going to be this option, guys, where areas have the potential to break, and you're going to see it all the time. You're going to see areas with the potential to break. You're going to see strong triggers, odds favorable momentum coming into an area. If your small triggers smash through the area, not just eke through the area, but absolutely smash through the area, this area has the potential to break because of the odds favorable momentum. But guys, potential is not a clear path. And this is one of the most important things. Potential is not a clear path. So rule number 2 isn't met. That advantage is not in place on areas with the potential to break. Alinsky just showed a beautiful example where the small triggers have broken through these one-to-ones. The large triggers have not. So Alinsky, what you're showing me is exactly one of those areas with the potential to break. This is what we call a 50-50 look, guys, and it's not 50-50 because of the likelihood of success. It's 50-50. Whoops, I am all over the place here. Because 50% of your triggers have made it through the area and 50% have not, guys. The potential is there for it to break, but it's not broken, which means that you have to approach it differently than you would a high probability trend trade. And this is why we relate everything to advantages. So Alinsky, if the advantage of a clear path isn't present in your trade, it's going to be imperative that you have the advantage of momentum. It's going to be just a necessity that your entry area is spot on. And you did a great job on that one, by the way. But not having a clear path takes it from high probability to medium probability, which means that there is a problem on the chart. And if there's a problem on the chart, it's going to have to be managed assertively. You're going to want to take quick profits. You're going to want to get to a zero loss. And we'll see how that one turns out. I'm not sure. But termination conditions, guys, the rules have been in place forever. And it's just a method of keeping you safe. Price reaches the area, no triggers, no trade. For those of you guys doing a great job with your spreadsheet, here's a picture of termination. In each of these pictures, price first reaches a line, reaches an area, the triggers remain above, letting me know that I don't have a clear path. And then here's all the termination conditions from a high. And in each and every one of these pictures, the first thing that happens is price reaches the area and the trigger lines remain below. Can you guys hear me? Anyone other than Gary get a voice cut out? Am I clear or am I crackling? All right, I'm gonna do a little reboot on my microphone. Hold on one second, guys. That was the reboot on the microphone. Is that better? Debbie, you're clear? Well, Debbie, you paid extra, so it makes sense. I'm kidding. Is that better, guys? I just rebooted my headphones. Can you hear me at all? Okay, cool. Always tell me, guys. All right. Strong triggers, momentum, termination's false. That lets us have room to get to where we're going, guys. There's one more termination condition that I want to talk about today. And this termination condition is going to help you recognize change on the large chart before it happens. And this is the only termination condition that I look for on a smaller, faster chart, on my entry chart. And that termination condition is three divergences in the same place. What is divergence? Divergence means a loss of momentum, guys. It's literally if the sellers are in control, the buyers rob them of a little momentum. We recognize it through these cyan lines from lows or magenta lines from the top. And guys, these don't print till like the third bar. So you're not seeing it right when it happens. You're seeing it when the calculations are done. But if you see three of these cyan lines print in the same area, it may terminate the trend. And you'll see this on a smaller, faster chart first. It becomes more powerful when your trigger lines, guys, that same lesson on momentum, when your trigger lines become those anything can happen triggers. It adds fuel to those three divergences. And then finally, if your third divergence is higher than the second from a low or lower than the second from a high, it creates a head and shoulders pattern and it adds even more weight to the potential of that market turning. Guys, you're going to see this look from a low or this look from a high when your large chart may be turning with a clear path, even with odds favorable momentum and a clear path. Those three divergences in the same location are going to help you identify it. And then even more importantly, as you guys begin to take those 50-50 trades, these divergences are going to help you recognize change happening. And they're also going to give you the opportunity to manage out of trades before you have to take a loser. If three divergences print and you're in a short trade, it lets you know that it's likely to push up against you. It allows you to get out of that trade to manage your equity. All right, so there's rules 1 and 2. Large chart leads the way. Guys, large chart defines direction, momentum, and areas. Large chart is the reason we look for an entry. So far, we have momentum and we have a clear path, which means we're 2/3 of the way to taking a trade. We're not there yet. We still have to make sure that we have the area where the market is likely to continue. And we're going to do that through the identification of a window of opportunity. Rule number 3 says that you're going to use a limit order to buy or sell a pullback, meaning that you're going to use a limit order. Whoops, sorry. And if the market is going up, you're going to wait for the market to come down. And if the market is coming down, You're going to wait for it to go up. And I'm going to show you what this looks like on two charts. The large crowd wins, guys. The large crowd is going to create momentum. The large crowd is going to give you a clear path. The large crowd defines all of these things. There's always a small crowd that forces a pullback. They fight everything that the large crowd says. See these tails on the large crowd? That's the small crowd fighting, creating a pushback. Next-gen users, high probability trend traders. Without the small crowd, we never get an entry. So we're thankful for the small crowd. And what they're going to do is when everything says up, we're going to identify areas where trades may originate. Fibs, mid-bands, and yellow one-to-ones, guys. All high probability trend trades come from an area. Fibs, mid-bands, yellow one-to-ones. We want those areas to be inside of favorable large triggers. This is for my new users. This is where the biggest advantage comes from. Favorable large triggers means that your wide trigger, or that your large triggers, the large triggers that are native to the 5-1, they're smooth. And your synthetic triggers, the ones that kind of have little steps on them, one on top of the other, overlapping. Put one hand on your desk, put the other hand on top of it. That's overlapping. This is your best of the best look because it creates the smallest window of opportunity. Your smallest window of opportunity creates the least amount of risk going into a trade, guys. And I'm going to tell you right now, next-gen users, you will manage your risk long before you ever manage your profits. So let me give you a picture of favorable large triggers. And this is the look on the small chart. Odds favorable momentum. Large and synthetic are coming up like a shark about to breach in this uptrend. And I've identified fibs, mid-bands, and yellow one-to-ones. But my rules say that I'm going to use a limit order to buy or sell a pullback, that fight against the overall trend. And that pullback begins with a reversal bar. The reversal bar just means that I get a red bar after all these green bars, or I get a green bar after a bunch of red bars. When your reversal bar prints, when the small crowd starts to fight, we're going to create a window of opportunity. And for a long trade, it's going to extend from your highest point of support, the area closest to price, to your lowest point of support, the area furthest from price. But here's the key. It's the areas inside of favorable large triggers. Next-gen users are going to activate a limit order right at the top of the window, right at that area closest to price. Because of the momentum on the large chart, because of the clear path on the large chart, we're going to refuse to trip over pennies to try to save dollars. And this is what it looks like. And we're going to go through the whole process on this picture. Everything says up. The large chart says up. The large chart has a clear path. We're going to wait for the small crowd to say that they're ready to fight. This is where the reversal bar happens. At the time of the reversal bar, I want you to identify your trigger lines from the top to the bottom. Large and synthetic, the closer they are to one another, the smaller the range is going to be. But this isn't where trades happen. Trades happen in your window of opportunity, from the highest point of support to the lowest point of support inside of favorable large triggers. This is where the trade is most likely to continue. This is that point where the market is likely to continue. Next-gen users are going to activate a limit order right at the top of that window because of the momentum, because of the clear path. And this is where you cease to be in control of anything. The only thing you are in control of is whether or not you had the advantage of momentum. The only thing you're in control of is whether or not you had the advantage of a clear path. And now you're in control of whether or not you enter at the area where the market is most likely to continue. And now we wait for the market. And if it pushes back to your limit order, you're in a trade with those advantages, guys. We've created a window where the market is likely to bounce, which means that it may push to the bottom of the window, and that's okay. We've created an area where the market is most likely to continue. And as long as price remains inside of that area, I'm very comfortable in this trade because of the advantages present. But because you've identified the window of opportunity, you also have the ability to manage your risk, to put a stop, a protective stop outside of that window of opportunity. Um, this is where the market shouldn't go. With all of that momentum, with a clear path, with all of these areas inside of favorable large triggers, if it goes beyond that window, I don't want to be in this trade anymore. This isn't my trade. This is a trade that forfeits that third advantage, and I don't feel good about it anymore. And it's okay to take a small loss, guys. It's okay for it to hit that because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time, guys. It's a cost of doing business. Losses are a normal part of a positive equity curve. You are never going to meet a trader that hits 100% ever. But successful traders manage their losses through protective stops, through putting it where the market shouldn't go. Guys, this is your high probability trend trade. This is the absolute best of the best. Your job for 20 days, that's all I'm asking for, is to nail your entries, to get in at the best of the best spot because great trades create manageable trades. Great entries create manageable trades. Things that new users tend to do. Embrace their fear of missing out. I want you to remember that the small chart is a tiny little chart. What happens in one bar on the large chart to define trend, momentum, and areas happens in 15 to 30 on the smaller, faster chart, which means that there will be fluctuations. There will be little rises and falls. And if you get caught up on ticks and not advantages, it's going to scare the hell out of you. And a lot of people are going to get in at this top bar. And if you get in at that top bar, all you've done is increased your risk. All you've done is assured yourself a larger loser if this is one of that 20 to 30%. And the flip side is you have shortened the distance to your profit target dramatically. So you've increased your risk and you've reduced your profit potential. Another thing that we see a lot of people, I think we all do, Chef, in the beginning, these small triggers may turn against you, but they're still outside. And when these small triggers turn against you, it's giving you just the loss of momentum you need to get back to that best of the best spot. So don't get worried about those things, guys. The whole idea is developing trust. The whole idea is to go back and study, to look at these opportunities, to see them happen, to burn them into your memory so that they become easy, so that you can recognize them in the moment. And what you're going to find is that this is a setup that you will never miss. By the end of those 20 days, guys, you're never going to miss your great entry because you'll be able to identify momentum in the moment. You'll be able to understand termination conditions really pretty easily. You're also going to find these windows of opportunity long before they ever set up. You'll begin to anticipate these trades, almost like leading a passer. But I want you to remember that you're brand new, right? You're in week one, you're in week two. Don't put the pressure on yourself to be perfect in the first week. Don't put the pressure on yourself to find every trade, to catch every trade. You're going to get in late a lot because you're like, oh my gosh, that was totally the trade. So keep it sequential, guys. Keep it chronological. Make sure that you embrace the idea that trading is like eating an elephant. And the only way to eat an elephant is one bite at a time, because if you don't, it becomes overwhelming, right? It's the same thing. If you've ever had to lose weight in your life, if you wake up one morning and you say, I'm going to lose 50 pounds, it's overwhelming. 50 pounds is a lot of weight, guys. But if you wake up in the morning and you say, I'm going to lose 1 pound a week, I'm going to do what it takes through repetition, through consistency to lose 1 pound a week, by the end of the year, that 50 pounds is gone. So your first bite is trend, and each and every one of you are great at this already. Green and red, guys, it's easy. Your second bite is identifying that momentum, and this may take a second. You may spend your first day identifying momentum, and that's okay. And then you're probably going to take a good week just recognizing termination conditions in the moment, identifying areas that are likely to stop the market. You're going to be able to identify them more rapidly if you go back historically, study, take pictures, present them in class, and use this great phrase, hey Mark, is this a term, right? Take pictures of what you believe termination conditions are, post them in the room. I'll verify. And then once you have these three concepts down, you're going to start looking for your entries, guys. And once you learn to take this entry, you're never going to miss it because this is your path to success. This is confidence through the memory of success. This is a trade that typically wins 70 to 80% of the time. This is a trade It is nothing but advantages. Three advantages to create an entry, and that entry creates a manageable trade. So guys, I'm going to ask you, is everybody okay with the idea that it doesn't have to be difficult, right? It doesn't have to be anything more than three rules, three advantages, and I circled one earlier on the ES. And guys, let's go through an entry bar by bar. Let's go through, let me line these up. Large chart, small chart. That is 822. And I want you guys to play along if you're learning this. It's easier when the market's not moving. So we create this recognition in a bar by bar scenario so that when it happens in real life, you're able to catch it. So we're going to start with the large chart. What direction is the market trending? Are we going up or down here? We're going down. That's the easy one, right? And guys, I'm walking you through the process. When I look for a trade, this is how I do it. I look at my chart and I say, oh, I'm in a downtrend. Well, do I have odds favorable momentum? Do I have small triggers below my large triggers? Is there space between the two? Is the odds favorable for the market to continue? Absolutely, it is. And since it is, I'm going to go to my next rule. Do I have a clear path? And guys, this is the one that trips people up a little bit. Because the first thing you're looking for is the bottom part of the most current bar. Has it reached one-to-ones? Has it reached Fibonacci support? If the answer is no, then I have room to my target. Give me a why if that makes sense, guys. This is where we start to have to think a little harder. And then there's another part of that. Did my trigger lines clear the area above me? See how both my small and my large triggers are made it below the support? It's acting as resistance. I'm looking at this line right here, guys. I have a clear path, 100%. So if I have a clear path, and I have odds favorable momentum, and the market is trending down, I have to turn my attention to a smaller, faster chart. And sure enough, everything says down. My triggers are down, my smalls are outside of the large, everything on this chart says down. Do you guys remember what we're waiting for to define that window of opportunity? The market is going down without us. The market is hauling butt to the downside. New users are going, I'm never going to get paid. This is horrible. What am I going to do? Life is tragic. I think I'm going to cry. And this market just continues to go down. But guys, the market is cyclical and it repeats itself over and over. And eventually that small crowd fights, more often than not. And guys, here's your reversal bar. At the time of the reversal bar, we're going to create a window of opportunity. I'm going to look from the bottom of my triggers to the top of my triggers. See how they're not overlapping and that space is a little bit bigger? But guys, this is the recipe every time. From the top of the triggers to the bottom of the triggers. And now let's refine. From my lowest point of resistance, the closest point to price, to the highest point inside of favorable large triggers. What I've just done is identified where the market is likely to continue. And I've done this on the reversal bar. My job is to put a limit order a couple ticks below that area. Give me a Y in the room if you're with me on this part, guys. Wait for the reversal bar. Look for your triggers. Define the point where the market is most likely to continue, guys. This is your potential entry. And the market's going to come back, hopefully. We don't have any control over it. And you're in a short trade. I have strong triggers. It pulled back. Guys, I'm in at 43.54. The bottom of that bar was at 48. There's the bottom of the bar. Guys, that's terrifying because there doesn't feel like there's a lot of room. But if you're selling a pullback, it increases that room quite a bit. And watch this. If I scroll back, see the tail? Watch what happens when I circle the tail. This is how you're going to study. That tail, it didn't show. Hmm. Should be right at the area of resistance inside of favorable large triggers. Oh, this is this pullback. And the market keeps going down. And watch this. Guys, this square was this tail. This was a 50-50 trade. Smalls are through, large or not. I apologize. So if you caught this trade, awesome, you're making money. Yep, I messed up, Ron. It's Monday. And now we get into this trade where everything is down. I apologize, guys. We just found two trades, but the recipe was the same. So if you missed this one, if you didn't take it because it wasn't a clear path, we're waiting for another reversal bar. And there it is. And at the time of this reversal bar, here's my window of opportunity from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. It repeats itself all day long, which means that my entry is a couple ticks below that midband, right around 52. And the market comes back up. See how the midband works itself down? Guys, you can lower your order to get it below that area, and you're in the market. And it starts to head that way. Guys, this is the easiest way to learn entries, to go back, to circle those tails, and then just go through the process. Does one divergence on a small chart scare me? Absolutely not. And it goes down. There's those fluctuations. Your small chart's going to go up and down, guys, but your large chart always says go. And it just keeps bouncing off that midband inside of favorable large triggers right until it makes it to Fibonacci support there at 43. And that's where the weak triggers create the bounce. So guys, give me a Y in the room if you're with me. Odds favorable, clear path, look for the entry. Rinse and repeat, guys, all day until you're good at it. You won't be good at it on day one. You might not be good at it on day two. That was 9:52. Let's scroll ahead. Here's one of those 50-50 trades, guys. If I circle the tail, nope, that wasn't it. Where was it? I want to see where this one's set up at 9:59. That was this one right here. So check this out, David. This is a great lesson. Let's go through the whole thing. The market's moving down. Do you see how we have a clear path? Price hasn't reached support. There it is right there. Price has not reached support, but I do have a clear path. And then look at this right here, guys. Price reaches Fibonacci support. This is a termination condition, and this is an important lesson for everybody right now. This is an area that may stop the market. Not only is it an area that may stop the market, it also has weak triggers. So if I'm thinking in terms of advantages, I don't have momentum and I don't have a clear path. Give me a Y. David, do you see it? Price reached. Alinsky, do you see it? Price reached. Here's the hardest thing you're going to do as a new trader, guys, is you're going to look at your small chart when that happens, and you're going to say, but Mark, the entry looks perfect. But Mark, the entry looks just unbelievable. And you're going to take this entry and you're going to get lucky and you're going to win, right? And you're going to say, see, I can trade into a termination condition. Guys, this is the market training you to break your rules. This for me is no trade. I would never even look at my small chart. But if you're watching the small chart instead of letting the large chart lead the way, you're prone to take that one. And let me show you why we don't. because that's ugly. That's a termination to the tick, to the tick, to the tick. No triggers through on the pullback. Absolutely no triggers through. Guys, this happens over and over and over. And the market's going to give you this one little spike, this one winner that's going to make you break your rules the next 20 or 30 times. And that's what we want to avoid, guys. So we want to be consistent, consistent entries, consistent, um, just rules-based, pragmatic. Use a checklist. Here's a checklist. These are the same rules that I want to see you writing on your chart. I want you to define whether or not it's a termination condition that caused the reversal that has you looking. You can take a trade without it, but you're going to have to use those divergences on the smaller, faster chart to help you manage. Here's a video that talks about great tops and bottoms put together by my brother. It's outstanding, and every new user should watch it twice. Did you have odds favorable momentum? If you did, write it on your chart and point an arrow. No termination conditions. Write it on your chart, point an arrow. Area inside of favorable large triggers. Guys, it's so imperative that you use this language as a brand new user. Put a circle, show me your entry. I've never had anybody in the history of this checklist do worse than 70% winners, guys. Never. This high probability trend trade is designed to create confidence through the memory of success. Here's the exact same checklist with the visual taken out of the resource material, letting you know what odds favorable, what terminations, and how to identify a window of opportunity. If you're brand new to Nexgen, if you're trying to get this repetition down, so Alinsky, Lex, David, Manprita, guys, study this every morning. It reminds you exactly visually what your entry looks like. And the more you see this, the easier it becomes, right? Recognition through repetition. And then for my new users, one of the most important things that you can have in trading is a plan, right? One of the most important things that you can have when you're trading the market is the ability to do the same thing over and over, to take the exact same trades that create a statistical advantage, to never deviate from what has been proven to bring success, because the idea is to get paid. Here's your big disclaimer for those of you that are going to break outside of this plan, and most of you will. This plan is a stepping stone in your learning journey. It's designed to optimize your chances with the high probability trend trade and that 50-50 trade, that area with the potential to break trade. As a new user, through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the charts, reading the indicators. So as you grow with the indicators, so too may your plan, right? This isn't designed to shackle you to one trade. This isn't designed to keep you out of the market. It's not designed to do anything other than give you the absolute most solid foundation for consistency, to put you in a position where you're really embracing advantages. And notice that it says that it's on you to get good at it. It's on you to break out of this mold if that's what you want to do. And your simple plan for consistency begins with never fight the large chart direction or triggers. This is going to keep the average new user out of 60 or 70% of the typical losers new users take. You're defining your entry. That's it. 20 days, getting in at the right spot. I know it seems like a long time, guys, but you've got the rest of your life to get great at this. Don't feel like you have to be an expert in the first week. Just define your entry. And I want you to start taking pictures of what it looks like to get in at the right spot. And I want you to start putting each and every one of those pictures into your favorite look section. What's it going to look like to get you into a trade? I stole this one from D-Rock in class. And D-Rock said if the trend is up and the momentum is perfect and the path is clear, he'll take this entry, hell or high water. And there's one of those costs of doing business, right? But it's still the perfect entry. So D-Rock put it in his sheet. Guys, I'm also giving you my spreadsheet right now because I've got over 260 entries from clients. Some of them are 50-50 entries. Some of them are high probability trend trade entries. But what you're going to recognize is that almost every entry on these charts originates at an area of support inside of favorable large triggers. Almost every one of these entries is going to have the absolute best trigger look. And either a clear path or a path with the potential to break in an outstanding set of circumstances getting you in there. So your entries create manageable trades. I want you to focus on those entries, guys. I want you to take that spreadsheet and go through one at a time and look at every one of them and burn that image into your mind so that it slows the market down for you. Every great entry creates a management opportunity, guys. We manage our risk first, and we do that through getting in at the area where it's most likely to continue. So the simple management plan and the simple trading plan is reliant on perfect entries. This is why we study them, because when you get in at the area inside of favorable large triggers, your chance of success goes up. Your risk is reduced. And your stop goes beyond the window of opportunity, guys. Out there where the market shouldn't go. It's typically going to be 12 to 14 ticks in a futures trade. Once you enter the market, there's nothing for you to do. There's no need to move stops. There's no need to adjust targets. Sit on your hands and wait. And you're either going to get stopped out because the market moves up and hits that, and that's a cost of doing business. It's a normal part of a positive equity curve, or you're going to get a reversal bar in the direction of the trade. And if you get a reversal bar in the direction of the trade, you're going to manage your risk even further. You're going to reduce it from outside of the window of opportunity to a couple ticks above that reversal bar in the direction of your trade. And now, once again, there's absolutely nothing for you to do. You're either going to get stopped out for a small loss, and you're going to be okay with that because you're going to do the study to believe in the methodology, to understand that great entries create manageable trades, and they heighten and increase your chances of success. So you're either going to get stopped out or the market's going to hit your first target. And in this KISS plan, the simple plan, your first target's only $100. And it's only $100 because hearing NinjaTrader tell you that you just got paid evokes emotion, and it's happiness, right? And it's confidence because now you've been paid. You're a winner. Way to be a winner, guys. And you're going to move your stop to break even. So not only are you a winner, but now you've got nothing to risk. There's absolutely no risk on the trade. You've already been paid. And $100 doesn't seem like a lot, but that $100 is designed to help you build confidence in allowing the large chart to lead the way, to not get caught up in the fluctuations on an entry chart. Because if you've already got money in the bank and you have absolutely nothing to risk, it's easier to trust that momentum. It's easier to trust that clear path. So at this point, there's nothing to do. You're either going to get stopped out, break even, which really doesn't hurt, guys. It's like a pillow fight with soft pillows. Not like the ones at my brother where he would hide a fist behind the pillow. And you're just going to let it run. You're going to let it run to the second target, or you're going to get stopped out, break even. And I'm going to tell you right now, as you learn to read your indicators, there's going to be a lot of break even trades there. But your study, your repetition, your question asking is going to get you to where you change your management plan a little bit based on your indicator reading. And your second target's at 200, guys. And that's not a home run trade. That's a base hit. But $300 is an outstanding trade. $300 is a confidence builder. $300, to be honest with you, is almost an income replacer, because if you make $300 a trade once a day, that's $1,500 a week, guys. That's $6,000 a month, and that's $72,000 a year. And now I just want you to say, if I do this for 30 days and I feel great about it, I'm going to double my contracts, right? I'm not going to take more trades because this one has all the advantages. So I'm just going to go from a 2-lot to a 4-lot with the exact same management plan. And suddenly that $72,000 year is $144,000 a year, guys. And it increases as you increase your contracts. You don't need more trades. You don't need to catch the edge trades, the HVA trades, the momentum trades. You don't even have to take the 50-50 trades. Sit on your hands and wait for the absolute best trades and give yourself the best chance of success. Commit 100% to a plan. Put yourself in a position. High volume area is what the HVA stands for, Chef. It's a trade that'll help you identify the first trade at a top or a bottom at a termination condition, but it requires a second chart and a different set of rules. So if you focus on the high probability trend trade for a while, you get consistent to the point to where you never miss it, and you want to add a trade, Chef, we'll talk about the HVA for sure. But guys, this is your path. It's been proven over and over. It has been proven over and over to be the path of success for people. And when people come to me and tell me that they can't find trades, it's typically because they're looking for all the trades, not the best trades. When people tell me that they can't read the market in the moment, let's go through it. I have an uptrend. I have odds favorable momentum. I have a 50-50, meaning that 90.01 isn't broken. And if I look over here, my highest point of support inside of favorable large triggers is support. And that's how quickly it can happen. But it's not going to happen like that if you don't do the study. Guys, 90.01 isn't broken. It only has the potential to break, which means that this is not a high probability trend trade. It falls into that medium probability trend trade, which means that it needs a different approach. So I've included in the 50-50 plan how to take that trade with the best chance of success. And it says I have to have odds favorable momentum on the 13.2 and the 5.1, which I do. It says that I can't have divergence on the 5.1. And it also says that I should be coming from a good top or bottom. So let's go through it. And this is a great lesson on good tops and bottoms. Guys, is this a termination that created a full reversal? Or is this a pivot coming from the middle of nowhere? What do you think? In order to have a good top or bottom, it's just a pivot. And if this is just a pivot, not a termination, that's a no. So the brand new user says this isn't my trade. Isn't that easy? And now I also have divergence printing from the reversal bar, which means that that's two no's. It's just a pivot because it's not coming from an area, David. Absolutely. So this is a pivot from nowhere. Let's scroll back and let's find. This is a pivot from a fib that creates a full reversal. This is a strong bottom, David. This increases the chances of your success. This is a pivot not from a fib area. It's still a great look, and with a clear path, I love it. But when that clear path isn't there, and divergence prints, guys, the only thing that I can do is resort back to my checklist. I've got divergence on the 5.1. I'm not from a good top or bottom. Therefore, I don't have a trade. And it really is that simple. Embrace the idea that there's only two options for the brand new user. Either your rules are met, right? Means that your checklist has gone through, it's yes on everything, or your rules are not met, and you're just going to sit on your hands. And guys, when your rules aren't met, it doesn't mean that you don't have to do anything. It means that you can grab that camera and watch this. I take this picture, and I just write, not a good bottom. And then I take that same picture and I write 50-50, right? I'm reinforcing the looks and the ideas. And what does a 50-50 mean? Not a clear path. Guys, I'm not taking a trade. I'm talking about why I'm not taking a trade. Divergent printed. So for me, I'm going to put an arrow right here and I'm just going to say, rules not met for trade. And Alinsky, because you're on 8 and I'm on 7, and I also went through and I rebuilt my database every morning. It's the same ticks, but one of the things that I do on 7 is I rebuild my database every morning. I go through, repair it, and replace it so that I have the freshest data each and every morning. And sometimes one corrupt tick somewhere around midnight can create that little divergence discrepancy. But you still have weak triggers, right? And check it out. The annotation doesn't change. I still have weak triggers at the low. I'm still not coming from an area, and it's still 50-50, isn't it? So trade your charts, and it'll help a lot. And guys, that's our first hour every day. Odds favorable momentum. Price reaches an area. The small triggers have barely made it through, but the divergence prints. I could get into the trade, but my rules say don't. Weak top, straight to a termination, termination, straight to another termination. And now we're in a holding pattern, just waiting to see what happens. So, guys, that's our first hour. I'll leave you with the S&P. We'll see what it does. I'm going to take 5 minutes. I'm going to go get a big drink of water, high five my wife. Do me a favor. When I come back in the second hour, we are going to do a couple different things. I'm going to look at the charts that you guys have posted. I'm going to look at the pictures that you posted, and we're going to talk about them. And I want you guys to understand this, that every time I talk about your charts, every time I talk about what you've put on there, I'm going to refer to the advantages every time because this is a teaching class. And no matter where you're at, no matter what kind of trades you're taking, I'm still going to resort back to the advantages every time, to momentum, a clear path, and an entry area. If you take a trade that doesn't have all of these advantages, that's okay. It's your trade, right? But tell me why you did what you did. And if you don't tell me that you forfeited one of the advantages, I'm going to point it out. I'm not going to tell you you're wrong. We're going to look for the reasons that your trade might have still been a good trade. But if you don't have rules on the chart, I don't know that it was your trade. And that's why it's so important, guys. Put your rules on there. Annotate those charts. I'll be back in 5 minutes. When I come back, we'll get into the second half. And if we see rules being met live, we'll talk about them in the moment, what it looks like in a moving market. So, guys, I'll be back in 5. All right, let's get to the next round. Look at that. Termination condition. It's amazing. So here we go, guys. We're in a downtrend. Can everybody hear me? I'm in a downtrend, and I have a clear path, and I have odds favorable momentum, and this is my lowest point of resistance inside of favorable large triggers. That's my read, right? I'm not saying take a trade, but where is this market likely to go? It's likely to go all the way up to 54. You guys see how that works? I don't even have the reversal bar yet, but I already know where this market is likely to continue. And I know where it shouldn't go, which means that if I take this trade, I'm about 12 and a half ticks of risk. David, you see it? Live, right? Termination creates the downtrend. The downtrend gives me odds favorable. Odds favorable with a clear path. My stop has to go where the market shouldn't go. I know that this is a trade that typically wins 70 to 80% of the time, which means that this is a trade that's obligated to lose 20 to 30% of the time. And I never know what it's going to be. There was the top of the window, so my only option is either to get hit, 12 ticks, no big deal, or it gives us a reversal bar, and if it does, we'll reduce risk. Guys, this is your high probability trend trade. If this one loses, it's a cost of doing business. If this one wins, it's not because I made it happen, it's because that's what the market did. And that's the only option. That's it. But how terrifying to watch it turn against you, right? That's why we develop trust, guys. That's why we go through and we develop trust each and every day. 50-50, smalls below the large. Guys, there's that no rules met. Remember? Not a good bottom. Divergence prints. Sure enough, the 50-50 loses. Weaker triggers, no areas inside. Guys, it's rules for the win. Darn near every time. Look how this one's dancing. Oh, making us sweat. So I'm going to scroll up to the top, and we're going to start looking at the pictures that you guys have posted. We're going to start looking at all of your questions, all of your pictures, and we're going to see what's going on. Look at that. There's a reversal bar. Let's reduce our risk. There's that simple $100 target, right? I wonder if it's going to make it. I don't know. I'm not in control, guys. What do you think? Does everybody see it? This is where we start getting scared. Oh, it's going up. Nope, it's going down. Uh-oh, it's going up. No, it's going down. Oh my goodness. It's so much fun, isn't it? This is it. The only thing that you are ever in control of is whether or not your rules are met, ladies and gentlemen. I'm just going to leave it alone, let it run in the background. Chef, let's see what you did, my friend. All right, Chef. Odds favorable momentum. Practicing what you thought was a good entry and just wanted to let it run or get stopped out. Have a bad habit of exiting early. So let's start over here. Chef, that's one of those just barely eking through, right? So we are trying to break two areas, hoping two areas break, barely through. You are just knee deep in decision making areas. That's a tough one. And I'm not sure if you had divergence up top or not when that came through. I can't see it. And then here, we do have odds favorable momentum, but the path isn't clear, right? Should I be respecting this as a termination condition? Price reach Fibonacci support to the tick. So it's 50-50 on this one. Smalls are through, large or not. But Chef, do you see how it hit it to the tick? 100%, right? The momentum gave you a break, but rule number two not met. Does that make sense? Awesome. It worked this time, right? The market's trying to teach you to break your rules. It's a great picture. But do you notice how the great entry maybe isn't so great? There's no areas inside. So what got you in? And this is what happens, Chef, is you get comfortable a couple weeks in, you start doing these reads, you start seeing things, and what you notice is you start breaking your rules a little bit. And they work because the market wants to train you. I think it's a good look, except for that termination condition. And then Chef one more time. 50-50 on the bottom. There's the divergence. Wasn't coming from a good top. Um, could this be considered a clear path? Or do all fibs constitute a termination condition? Chef, wouldn't it be exhausting to have to try and figure out which fibs constitute a termination conditions and which don't? It sure would. So if you're small and you're large, don't break through. It's a term. And then, Chef, let's talk about what we see here because I think this is a real key idea for new people. Is we're not only hoping that this fib breaks, right? We're also hoping that this fib breaks, and we're also hoping that this divergence low breaks. So I've got three areas that I'm hoping this momentum pushes through, right? So I've got three areas that aren't broken, and I have a loss of momentum here. And then, Chef, I'm not sure what you're doing with your entries, but this is twice that you've ignored areas and gone to the top of the triggers. So that's not the top of the window. You said push your pull back to the top of your window because mentally I felt the momentum was slowing down and it'd be safer to get in at the top and not take it at all to minimize a loss or not take it at all. So let's take a look real quick. Chef, this is a great picture. Your window of opportunity is right there if the rules are met. From your lowest point of resistance to your highest point of resistance. And Chef, give me a why in the room if this makes sense. Your window of opportunity is not from the top of the triggers to the bottom of the triggers. That's huge. So by the time we get up here, we're like, man, this one's probably not going to work anyway. But it has a lot to do with three areas that aren't broken, not coming from a no triggers through termination, um, and then divergence prints. So there's quite a few things that for the brand new user, for the newer person, and you qualify to keep you out of that problem so you're not giving that money away. Great job posting, Chef. Keep them coming, man. This is how we get better. And you guys don't know it, but you make me a better trader too every time I look at your pictures. All right, Snorri. Strong bottom. Great. Uptrend. Odds favorable momentum. Love it. This is the only trade you took on Friday. You were either busy or didn't meet your rules. It paid off to wait for this one. And it worked out perfectly, didn't it? Great job, Snorri. So what did you make on that one trade from 23? So you made $300. You pulled the trigger one time on Friday and made $300. Guys, is there anybody else in this world that would be upset with that? I pulled the trigger one time on Friday as well, and you beat me by $10. And I'm not going to lie, it upsets me, Snorri. Because you're a week in, 2 weeks in, and you're better than I am already, dagnabbit. But isn't this amazing? You had to wait until that point. And guys, I think that this is the best lesson. The hardest thing that you'll ever do as a day trader The absolute most difficult thing that you'll ever do is absolutely nothing when the rules aren't met. So Snorri, wonderful job. And guys, for those of you that are in your first week, Snorri's been with us 2 weeks. Is that right, Snorri? Snorri's at about 2 weeks, maybe 3 weeks. D-Rock is the same. Chef is the same. If you feel frustrated that you don't have it on day one, guys, I have people that are in their first month that are focusing on great entries creating manageable trades. I love everything about that one. Nice job, Snorri. And true story, I get so excited when I see you guys following rules and finding success. Like, that's my victory. My victory isn't what I do outside of this classroom. It's watching you guys find success through following rules. So strong triggers, unable to break the fib. Smalls have broken, but not the large. No divergence. Entry. No divergence against you. Rules met 100%, Snorri. Termination condition, everything says down. It's a 50-50. The only thing that I might say on this one, Snorri, is let's go through rule number 3 together. At the time of the reversal, from the top of the triggers to the bottom of the triggers, from the lowest point of resistance to the highest point of resistance, which happens to just be one line, would it be okay, guys, to be 3 or 4 ticks above those large triggers and say, you know what? If it doesn't happen right here, it's probably not happening. Instead of waiting for it to pull all the way up to all these areas of resistance. Snorri, does that make sense? Remember, guys, that 50-50 trades are not high probability trend trades. 50-50 trades really, and I hate to say hope, but they're hoping that this fib breaks. So by having that super small, concise window of opportunity, it creates, yeah, it had the potential to be much less. I won't say that it should have been, but at this point, Snorri, if I'm going to put a stop on here that's way beyond the window of opportunity, doesn't it really have to go above all of this stuff that could potentially stop the market? In which case you're looking at just an exorbitant amount of risk. So we know where it should continue from, and if it doesn't, wait for another opportunity. And I think that's one of the keys, guys, is be okay cutting your losses, right? Get out of a trade if it's not doing what it's supposed to do. And then just wait for the next advantage. It's a great job. It's a great look. It's rules based. 12 ticks creates reaction time. I'm glad you said that. So check it out. 12 ticks is your initial stop. 12 ticks is where it shows up, but that 12 ticks creates reaction time that allows you to put it in the right spot. Nice job, Snorri. It's a rules-based entry. It just didn't work. But guys, I'm always going to look through it and see if I can find a way to help you do it just a little bit better. And I think that that created a management opportunity. Hey, D-Rock, did that rebuild help you, by the way? I don't know if I checked back in with you. Okay, awesome. Jason got you? Cool. And Snorri, we all have to work on it. So, Alinsky, that's okay. That's up to you, right? Totally up to you. And then this is Alinsky's 50-50, right? Smalls are through, large are not. Perfect entry, and it just got you. And you're outside of the window. Alinsky, I could never get mad at this trade. The area had the potential to break. You took the shot. The entry's perfect. The stop makes sense. It just didn't work. Did the market end up going up from there, or was that it? Did it end up coming back down? Do you remember? It did go up? Okay, so this is crude oil at 9:30 this morning. Let's go look at it because let's see if we can turn this into a lesson again. Crude oil at 9:30. Ba-bum. Was that yesterday? Am I looking at the wrong market? That was today from 90.06 at 9:30. How does mine not look anything like yours? Are you in the November contract, Alinsky? The other one should be expired. You're in December? Okay, you are in November. That's crude oil, isn't it? Yeah, ES is December. So this is crude oil. Oh, that's 909. Sorry, old eyes. So that was this trade right here. Let's take a look at it. Sorry, I was 30 minutes off. So there was your entry. Yeah, they were just kind of jerks, is all it was. Your entry's perfect. They push a little lower. When everything is up like this, Alinsky, that little tail right there is a pretty good second shot. And this is what we call, oh, nope, that wasn't your trade. Yeah, maybe it was. Just a little continuation opportunity to get to that next level. And let me show you a picture of it. Because, guys, sometimes trend trades go beyond the entry, right? Sometimes we get stopped out. Let me show you a picture. This is a continuation look. So maybe you get three divergences. And everything on the large chart still says up, right? The way yours did, Alinsky. And it pushes lower and it gets you or you don't take it. When everything rolls again and it gives you a little snapback to an area with all the triggers agreeing again, it creates an opportunity to kind of finish the move. So it overruns a little bit, then everything agrees again. And what you'll find a lot is that the price is almost exactly the same. And that's why I wanted to see if this one went up or not. Because if we go back to your trade, everything's still set up, right? It still looks different. We've got very different look. And that was your potential entry. So just something to think about. Are you running synthetics? You are running synthetics. Do you clear your cache every morning, Alinsky? Do you go through and clean it out and set up every day? How many days back are you? You're 10? I'm 10 as well. You and I are very different on that one. It might be me, though, because I do a lot of changes to my charts. But I had full-blown term. That's why it was so hard to find. But I think the lesson here is the continuation. When you take a great trade and nothing changes on the large chart, there is an opportunity for a second entry. It's not always over. And as long as the conditions don't change on the large chart, it's okay to look for that next one. No worries, D-Rock. Guys, I never take off points or get upset if you don't post. I just like seeing it when you post. Some days you're just not going to get it. Gary, termination. You take it into the termination, and it works out for you. Nope, you take it into the second hit on the termination. I feel like you can't say no termination conditions. Does that make sense, Gary? I feel like that's directly into a fib and those small triggers didn't get through it. And it showed you, even on your small chart, you chose to take it anyway and it worked out for you. Then Chef, everything says up. There's your entry. I love that one. I sure hope that one worked out for you. Hey, David, take care, man. Look at that entry. You're like a sniper, dude. And again, this goes back to Chef. We could probably reduce risk at least a little bit, right? Because if it cranks down below those 1-to-1s even, probably don't want to be in it. Beautiful entry, man. That's what I'm talking about. Next one has results. Let's get to the next one then. Dun, dun, dun. Oh, great googly moogly. Chef got paid. First target hit. That's a really tight trailing stop, Chef. Why not just exit? So, and this is the management part, right? This is the next piece of the puzzle, Chef. Great entries. You're in at 69, you're out at 73. So you made 200 bucks on it. Just about. If you're going to put your stop 2 ticks behind the market on a small chart, Chef, you might as well just hit close and wait for the next shot. Does that make sense? Because your stop is right between the pullback to the area of support inside a favorable large trigger. So the only stop that really makes sense here is maybe break even or just exit. And then when you exit, take the entry again if it comes back for you. Great job, though. Beautiful entry, man. Every advantage present. Every advantage present. I love it. And it really can be that easy if you allow it to be. I say that a lot. If you allow it to be easy, it'll be easy. Couldn't find a good entrance for this move. Would this be considered more of a momentum trade or did you miss something? I love this question. Chef, I'm not saying that this is what you're saying, but when people see the market drop like this and they don't find an entry, they start asking, Mark, how do I break my rules to get into this trade? Chef, did you ever get a pullback to resistance inside of favorable large triggers from start to finish here? Does anybody see an entry that I don't see for a high probability? So it's just not your money, Chef. It's hard to watch the market do this. You just didn't get an entry, which means that it's not yours, which means that it doesn't fit your plan. And the fact that I don't see an entry in there makes me so happy for you. Doesn't mean that you won't find one eventually, but as a brand new user sticking to a plan, giving yourself advantages, yeah. No, dude, you did awesome. There was no indication that it was going to reverse. And to be honest with you, Chef, if you took this long and lost, that's the only entry that I see. And it's not even in the direction. Because you had odds favorable in a clear path in an area inside. And if you got in at the area, you took a 4-tick loser before that market just absolutely cratered. Does that make sense? That's beautiful. Way to stick to your plan. John Novak used to say, and it didn't really make a lot of sense until later in life. He used to say that if you walk into a bank and you say, "Hey, give me all the money," you're going to get tased and hogtied, right? Like they're going to shoot you, you're going to jail. But if you walk in and you say, "Hey, give me my money, please," right? I would like to pull the money that's mine, that's from my account, that fits my rules. You're usually going to get it. Yeah, it's hard to see the market go without you, but it really does. It gets easier. It really does. And then Gary, weak triggers, weak triggers. Gary says, you know what? I have a clear path, so I'll take the perfect entry and I'll manage it assertively because I don't have the advantage of momentum. Gary, solid execution on that one. I love it. I sure like weak triggers and a clear path more than I like no clear path. That's just me. We're all different. That's the beauty of trading, guys, is we all see things differently. Ron says breakfast trade. What does that mean? That means clear path. Not a trend trade. Strong triggers, rocket momentum, quick money. Ron took his chart reading and turned it into a trade that works for him. So, Chef, eventually you may find an opportunity in there, right? With a little bit of study, with a lot of repetition. But right now, there just wasn't anything for you. Ron, nice trade. Chili dog with, ooh, that actually would be delicious, I think. And then here we go again. Who was this? Snorri? So we have weakening triggers. This is the same one, right? Weakening triggers, but a clear path using your chart reading. I love it when I can resort back to chart reading. I do have a clear path, but I don't have the momentum that says, hey, the market is likely to continue. I don't know. Ron, you're what, 173 now? So you've been with us about a year, maybe? Maybe not even. I'm not sure, to be honest with you. But D-Rock, can I tell you that his trades have nothing to do with how long he's been with us? Oh, you set this up for me, didn't you? You just lobbed it right at me. D-Rock, his trading is solid because he does the same darn thing every time. Ron came in and he studied and he learned how to read his charts and he said, this is what I'm comfortable with. This is the look that's easy for me. So he wrote a plan. And if you look at Ron's trades, 95% of them look exactly the same, guys. That's the key to being successful as a trader. It's, yeah, if you want a steak, you want the fillet. Trading is like that. Don't wrap a piece of bacon around a hamburger and call it a steak, guys. That's a hillbilly steak. I know because I'm a hillbilly. So Snorri, and you're exactly, and you guys are 2 to 3 weeks in, but you're sticking to the path. So Snorri, D-Rock, Chef, you guys that are keeping it simple, focusing on advantages, that's amazing. And then Snorri on this one, you had a clear path but weak triggers, right? Do you see how the advantage of momentum is gone? If we just go back to advantages, you don't have momentum. Does everybody see that? Which means that it's no longer a high probability trend trade. It's now a medium probability trend trade. But your great entry allows you to take quick profits. And then when the momentum goes away even further, you're able to get out break even. Man, this is a great trade, Snorri. Doing great is doing great. Absolutely. Reps are the key. The only thing that I can't give you guys is experience. That's up to you. Snorri, I think you did everything perfect on this trade. And I want to talk about those of you that are becoming chart readers in the morning or in the moment right now. The advantage of momentum was gone. Therefore, it has to be managed assertively. You did a great job to not give anything back on this trade. Beautiful work, Snorri. And then who's next? Alinsky. We're talking about the 50-50, right? Oh, that was your divergence. You had divergence on there. And then Gary comes in. And Gary says, once again, right into the termination condition. Oh, price had not hit fib. It looks like it's snuggled up against it. It may not have looked like it in the moment. You say pull back to the mid band, but you are in well above it. Gary, are you with me in here? Guys, this is a NASDAQ thing. So if you're not trading the NASDAQ, don't worry about it. Gary, do you see how your small triggers are a full bar away from the best spot? For me personally, no. Because your confirmation gives you absolutely no room to manage if that fib holds. Does that make sense, Gary? If you're going to take a trade this close to a fib that could hold, how do you manage it? But when the small triggers are a full bar away, Gary, and your rules are met, take it at the area because it gives you time to get in and manage that trade. Does that make sense? This is NASDAQ specific, guys. Awesome. Great looks. You knew what you were doing and why you were doing it, but I think that's one way to maybe get it a little bit better for you. And then Tony, everything says up with momentum, so you get in at the area. Oh, you get in on the correct side. Taking that lesson again, Tony. Nice job, bud. Smalls were coming down too strong, so you said, I'll take a close on the correct side. You still had plenty of room to manage. Doesn't that take so much stress out of trading the NASDAQ? I really think it does. NASDAQ ate my lunch for a month straight. And once I started to recognize those patterns, it really helped me out a lot. Nice job, Tony. And it takes a while to believe it, but eventually you do. See how his small triggers were strong against Gary? His entry's on the correct side, the first close on the correct side of the small triggers. So he said, I know that this is my area, but I want to close on the correct side. And then he takes it. And this works because he has a clear path, because he has odds favorable momentum. Nice job. And then Snorri, odds favorable, clear path, perfect entry, quick money. And you just tightened up to save money. I'm not mad at you for that. We're in the business of getting paid, right, Snorri? I'm telling you guys right now, home runs aren't where it's at. So you get out at 51.25. You're in at 53.25. So that's a $200 trade for you, right? But that's a $200 trade with the advantage of momentum. It's a $200 trade with the advantage of a clear path. You took the perfect entry, two divergences, you're losing momentum, right? It's starting to wane a little bit. Pfft, take it. But do $200 three times a day, right? $600 day. It's a $3,000 week. That's a $12,000 month. That's a $144,000 year. Taking the money. There's a phrase that John's been saying for years. TTFM. TTFM. Take the fabulous money. Because that's what we're here for, guys. We're here to get paid. Every time. Then Ron on Simulator will do one of those crazy trend trades. Into a termination, though, right? It's into a termination. It's actually into two termination conditions. And that's why Ron's on Simulator. He's like, I wonder if these patterns repeat themselves even in less than ideal situations. And they do. But that's one of those financial suicides. Uh-oh. I'm sorry I didn't see this sooner, Lex. Have you been able to get help yet for this? Not yet. Right click on it. Lex, are you with me? I hope you didn't get frustrated and leave. Guys, if you get bars and no indicators, a lot of times you can click on your data series real quick and change your 10 to a 9 or 11, and it'll bypass that little piece of corrupt data. So Lex, if you didn't get that, let's get you to Jason and have him figure the things out for you. And guys, that's all the pictures that I have. This was odds favorable and a clear path, and it didn't quite make the mid band. A lot of you guys are bummed, right? A A lot of you guys are like, dag nabbit, it didn't get me. Alan says, psh, I'm 3 or 4 ticks below because I don't trip over pennies. Awesome, Lex. Wyatt the fib. The fib is outside, isn't it, Gary? The fib wasn't even in the large triggers. Yeah, a couple ticks below. And Alan, you nailed it. Alan's like, you know what? With this much momentum and everything down, I'm willing to pay a little extra. Alan, great job. And Alan, I gotta tell you, man, you are like full-blown smooth mojo these days. You are following a plan and crushing it. Um, the reason we get in a couple ticks below, guys, is because of this momentum. Be willing to pay a couple extra bucks, guys. Be willing to get in a little lower when you have odds favorable momentum. It's a great trade. And then here's those weak triggers again. Oh, how many times are weak triggers going to get you until they don't? Gene, bingo. Gene, are you suggesting that with odds favorable momentum and a clear path, you can just all willy-nilly take a pullback to resistance inside of favorable large triggers and make money effortlessly? Is that what you're trying to sell me, Gene? You and your snake oil? Sounds like grade A baloney. Or maybe it doesn't. Maybe this is all you need. Has anyone ever entertained that possibility that you don't need all the trades? You just need the best trades? You need to do the same darn thing every day? I'm going to tell you guys right now, every one of you in this room is going to stick to a plan. Guys, every one of you in this room is going to stick to that simple plan. Stick to that simple, high probability trend trade. Stick to that awesome advantages, right? Right until you learn to read your charts. And I'm going to tell you guys exactly how this is going to work because it happens to everybody. And I want you to know that you're human. Guys, your plan is going to bring you success. Your success is going to make you feel invincible. And when you feel invincible, you're going to make mistakes. Because you're going to forget that you don't control the market. And I see this all the time, and I saw it with myself, which is why I recognize this so much. So show of hands in here. Who's gone beyond and looked for all of the trades only to come back to simplicity and regain their success? Has anyone other than me taken that path? Guys, all of you will. And it's okay, it's normal. And that's part of the repetitions. And guys, I'm telling you right now, Nexgen has the absolute best software in the world. I firmly believe that. I've never seen anything better. If you find something better, let John Novak know. He'll buy us a copy. But the only thing that you don't get is repetition, guys. You struggle with waiting. I love that. Gene, I'm reading a book right now. I'm almost done. I'm going to share this with you guys. My brother sent this over to me, and it's called Emotion-Free Trading. Because that's what we want. We want to be pragmatic. And I wasn't going to bring this up, but I think it's important. Emotion-free trading talks about all the things that you're going to go through, all the struggles. It's going to talk about visualization. Guys, I am absolutely in love with this book. I'll probably read it 3 or 4 times in the next week. Um, one trade. And see, but Gene, what you're doing, yeah, 45 minutes times 10 Apex accounts is sufficient for me. But what if it doesn't happen in the first 45 minutes? Are you okay with it? And then, Gene, what if you get the perfect trade in the first 5 minutes? Are you confident enough to take it? And this will be your next step, Gene, is realizing that doesn't matter how long you've been sitting on your hands. When the rules are met, the trade is there and the trade is yours. And that's developing trust in the methodology. That's developing trust in the idea that three advantages can put you in a position of success, right? And it doesn't matter if it's in the first 5 minutes or if it's in the last hour. You are so sold on the idea that odds favorable momentum and a clear path and a pullback to an area inside of favorable large triggers. That's not my best trigger look, is it? But my path is clear and there is a window and there's no divergence in strong triggers. But you'll get to the point to where you look and you're like, oh, my rules aren't met. I'm not going to do anything. Oh, my rules are met. I'm going to do everything to get into the trade. I took this picture this morning. Even with a pivot stop out at support, weak triggers, odds favorable, everything up, guys, this one fib said don't take the long. That one simple termination condition said don't do it. And sure enough, it saved me, right? It kept me out of trouble. And this is what I do when my rules aren't met. Well, that's the rules being met. Let me see if I can find the other one that I did. I must have deleted them. No problem. So let's do it in a live situation. Or maybe not a live situation, but let's take this right here. Not strong triggers, right? But Snorri, let's say hypothetically, well, that one's going to be a little harder. Let's see if we can do one that pulls back to an area, and we'll go through the entire process. And just for you guys are going to say, but Mark, it's into a termination condition. This is a stop placement lesson. Everything says down, and you get a reversal bar. And I know that you're good with this, right? So my eyeballs go from the lowest point of the triggers to the highest point of the triggers. And this isn't my window of opportunity. And I want all of you to give me a why if you're with me. This is not my window of opportunity. This is where I'm looking to create it. My window of opportunity is going to go from my lowest point of resistance. So I'm going to take from the bottom of the triggers to the lowest point, which is the midband, to my highest point of resistance. And guys, there's your window of opportunity. Is everybody comfortable with this? This is the point where the market is most likely to continue. All right. Because of the momentum on the large chart, because of everything saying down on the large chart, I'm going to go 2 or 3 ticks below this, guys. I'm going to be willing to spend a little extra money because this chart looks like that. We'll fudge a little bit because this chart has odds favorable momentum because this chart has a clear path. So here's my entry. Nothing to do except wait to see if I get it. Midband comes down. I may drop it. I'm going to put this at 56. And now I'm in the market. So your ATM strategy, 56, 57, 58, 59, represents 12 ticks. So far, so good. The second I enter the trade, my automatic stop is at 12 ticks. Does everybody have that set up? So the second I'm in this trade, I'm at 12 ticks, right? So Snorri and everybody else working on management, I have one line, one single line where the market is likely to continue, right? I have one pragmatic, proven line where the market is likely to continue. If the market goes, let's see, the top of the triggers are 57.50. Let's give it 4 ticks above the top of the triggers because overrun happens, right? So instead of 3 points, I'm at 2.5. That's only 2 ticks, guys. 2 ticks on the S&P is $25. That's not a lot of money, right? But what if you take 10 trades during the week and you save that $250 every week, which means that you're saving $1,000 a month, right? And that's how you have to think about it. If the market goes to 58.50, Snorri, do you want to be in this trade anymore? Or have you gone so far outside of your window that you're like, dude, this isn't it. This isn't great. I don't like this. And that's the first way that we manage our risk, guys, is we just put a stop where the market shouldn't go. I typically never go, well, that's outside of the triggers, because what if it ticks a 2, right? I'm willing to put myself in the kill zone. I'm willing to risk money. And guys, when it looks like this, the market has to come get me because I know I have so many advantages. I literally, like, triple dog dare you, market, come get me. And then we get a reversal bar. So Snorri, here's the second thing. Now I go from 10 ticks to 2 ticks above this one. 1, 2. Now I'm risking $75. I have odds favorable momentum. I have no termination conditions. I have the entry at the absolute best area. And because the trade has gone in the direction, I literally have 3 ticks risk. And here's the cool part is if we're super pragmatic, there's my $100 target, almost a reversal bar away. And the next bar hits my $100 target. And now I can't lose. Just use the phrase where the market is likely to continue, Snorri. I was an English lit major, and I do believe words are powerful. And if you use this every time, I will enter the market where it's most likely to continue. I will put a stop where the market shouldn't go, outside of the window of opportunity. And that's how we manage our risk. And if we come down, the market trades down, and I think that's this look right here. There's your pullback. Oh, look at that. The limit order is right at where your first target was. Comes back and hits it, and we're in right here. So where shouldn't the market go? I'm in at 53. That market probably shouldn't hit 55, right? Because here's the top of my large triggers. Does that make sense, Snorri? That's about 8 ticks. You could leave 12 on it up here at 56. Well, and that one gave you a reversal bar. So you were able to reduce it. But do you see how if the market would have gone all the way up here, that is so stinking far beyond where it should bounce? Why not reduce it a little bit? And I'm not saying run it super tight. Large chart wicks the large triggers and then moves. But we're not trading a large chart wick, are we, Snorri? We're not trading a wick on the large chart. We're not trading the tail on the large chart. What we're trading is the pullback to resistance on the small chart. The large chart defines direction. The large chart defines momentum. Here we go. I can't trade a tail on the large chart because if I try to trade the tail, let's see if we can get a tail to do it. Let me put my template back on. But if I try to trade the tail on the large chart, I've got a great picture for it. Well, that's into a termination, so we're not taking that one. This right here, Snorri, isn't a tail on a bar until the market is all the way up here smashing into your stop. Hey, take care, Ron. Thank you for being here. Does that make sense? This tail isn't even a tail on a bar until the bar is all the way up here at 55, which means that inside of this bar, this is one of my favorite things to do. That's all the price action inside of that bar by using the smaller, faster chart, Snorri. So we're not trading the tails, right? We're not trading a wick. We're trading where the tail is most likely to happen. Does that make sense to everybody? I've had people say, hey, the tail formed and the trade is gone. If this is going to form a tail to the downside, that's where it's most likely to happen. And then if we just scroll back a little bit, let me put the same box on this one that did form a tail. There it is right there. So we don't know where this is going to happen on the large chart. We only know that an area inside of favorable large triggers on the small is the most likely spot for it to happen. And for those of you that are trading, that go through the day and say, man, I think I missed a trade, or I think the market didn't offer anything, that's when you can go back, and when the rules are met on this one. So where was your window on this one? Obviously, that's not your best look, right? But we were doing it just for stop placement. If I only have one line inside of favorable large triggers, look at where that line lines up. Do you see the correlation? So the large chart tells you odds favorable. The large chart says close clear path. The small chart says this is probably where it's going to bounce from. Doesn't mean that it will, but that's your best chance of success. Does that make sense, Snorri? Guys, I think one of my favorite things about this class is that I say the same thing every day, and you guys force me to say it a different way. Because everybody clicks a different way. I've had people hear the same lesson 100 times, and then the 101st time they're like, oh, that's what that meant. So quick chart read. Weak triggers at resistance, no triggers through. Guys, does anyone have rules met for a long trade? I don't. Smalls are through the area, but the large are not. This is a 50-50 with 1, 2, 3 areas that haven't quite broken yet. There is no divergence, but I'm not coming from a fib. So Snorri, let's go back to window of opportunity. And this one's going to teach us to break our rules. Is based on just stop placement. How do we feel at about 17 ticks risk? I love that, Snorri. How do we feel about $170 per contract with 1, 2, 3 areas that haven't even broken? That's a lot of risk for a maybe trade, isn't it? Guys, give me a why. Those of you that are starting to look for 50-50 trades, give me a why if that makes sense to you. 35 hasn't broken. 30 hasn't broken. 25 hasn't broken. And my large triggers are all the way down here by the reversal bar marker, letting me know that price is likely to snap back to those large triggers. Which means that if I made the choice to enter right here, I'm fighting the gap theory and I'm hoping that 3 areas break. And here's the darned thing of it all is every now and then this one's going to work like a champ and run for hours. And it's going to train you to break your rules. Weak triggers, 3 divergences. D-Rock, I'm on 7 and I adjust mine so much. Make sure that you trade yours for sure. Alinsky, perfect. Odds favorable. No termination. Perfect entry. Smart stop. So, Alinsky, I know that you're experienced. One of the things that I would love for you to do is that crude oil. I have a 21. That's okay. I have a 21 fib. Let me look at yours again. You have a 5-1 fib that printed there. I did not have a 5-1 fib. So do me a favor, Alinsky. Let's go through this together. Click on the data series on your smaller chart. Are you 10 days back? Okay, so guys, I'm going to do this because it could be me. So with the CO, we just went over still the gap theory. Since absolutely, D-Rock, absolutely. Its price accelerates away from the large triggers, not the small triggers. So price reaches the areas, the mid band, the large triggers are a full bar away. All right, guys, I'm going to disconnect real quick. So my charts are about to go dead. And then I'm going to do this. I'm going to go Tools, Options, and this is on 7. Data. I'm going to reset my database. And I'm going to repair my database. And I'm going to reconnect. And let's see if I have any changes here. It may or may not. So does that make sense though, D-Rock? Price is smashed into the mid-band. Large. I'm resetting my database right now, guys. So there is, mine looks the same with fresh data. We'll see if we can get that second chart to come up. And mine's still going through. Oops. It's got like 3 workspaces that it's building right now, so we'll take just a second. I go through every day. And I did this yesterday as well. Doing cash and tick, clearing out all that. But guys, I adjust my charts so much during the day. I delete things, I add things, I change things. This is exactly what you do. Dano, let's see what you look like. And Dano, you're coming right off of a fib, right? You have that 5-1 fib as well. And that 21 fib, which sets you up for a beautiful long. Nice job. Termination, full reversal, odds favorable. It looks different. It looks very different. But it still closed the gap back to those large triggers, didn't it? D-Rock. So D-Rock, you had the termination there. It gave a little split, right? And then at the time of your pullback, your large triggers had made it through. Or your large triggers probably weren't a full bar away. But it still closed the gap to them, didn't it? Missed it by a tick. Area inside. Beautiful trade, dude. That's perfect. And then, Gene, you got to the final target. Textbook. And you and Dano are on the exact same page. Nice job, Gene. Mine just looks different. I just repaired and reset, but I like y'all's better, to be honest with you. Great trade. You guys have better charts than I do. And what does the large chart say, guys? Does it say momentum up? Does it say path up? Can we get into, with all of this momentum, if you're looking to hold for bigger moves, can we identify a spot in the distance where the market is likely to go with momentum? And then, guys, let's talk about management a little more. If this was my first stop after the reversal bar, the market just gave me another pivot. No reason I can't move a stop behind that pivot, right? Because it's gone down and then it's gone up. It's told me that it's done what it's going to do. What a great way to reduce risk if you're holding for a larger target. You're managing your risk. Nice job, everybody. Weak triggers. Man, that's just ugly on the NASDAQ. Weak triggers. It's ugly on the S&P. Strong as heck triggers. So what do you think, guys? Odds favorable. No terminations. If I get a reversal bar right here, is there an area inside of favorable large triggers where I may want to wait for a pullback? Give me a Y if you see it. Odds favorable. No terminations. You don't know how to put a stop on your trades, Lex? Let's fix that right now. All right, so ATM strategy. Hey, Gene, have a great day. Do me a favor, Lex. Hit this little arrow right here. And what that's going to do for you, let me move this back over so that you can see my chart trader. When you click this arrow, Nexgen gave you a lot of strategies right there. Click on the one that says like, it should say like 2 for 12, 20, 30. I don't have 8 set up right now. But if we go here, ATM strategies. There it is, ATM auto trade management. So Lex, here's your first one. Click it down. Click on like 2 lot, 12 stop, 1624. That's an S&P. 2 lot, 4 lots, 6 lots, whatever you want to do. And once you get this in place, and it is easy to make your own as well, but once you get that in place, it'll add stops and targets. And then if you want to make your own, there's the template to do that. And then guys, if you ever find yourself in a position, let me get rid of my ATM strategy. If you ever find yourself in a position and you don't have stops and targets in, this was a buy order, which means that I expect the market to go up, right? So if I expect the market to go up, the opposite of buy is sell, which means that a sell will pull me out of the market. So sell stop, I can manually put in a stop. And then the same thing is true for my targets. If I right click, sell limit, I can manually put in my targets. And then what happens is if it hits one of my targets, I have to cancel the other side. But it's all about balance. So Geo, if you don't have any in there, and I'm not sure why you wouldn't, but that's okay. If you don't, you can either build your own, which isn't too terribly difficult to do, or the easiest thing to do, in my opinion, is if you go to the resources and you just re-download the indicators and put everything on there, it'll give you every one of those ATM strategies. So it's up to you. You can either build, which is really easy. Select your template, it walks you through it. Or you can just download everything and get all the fresh ones back on there. And now it made it to support inside of favorable large triggers. And if you need help with it, of course, always go to the reference guide, but I can help you with it as well. I can pull up 8 at the end of class. Gary, everything says up and you're waiting for a pullback at the area inside of favorable large triggers. What's up, M? M says, missed me, dagnabbit. Missed me again, son of a gun. That feels a little low, doesn't it? M, do you see how you're on the wrong side of the large triggers? You're well below all the areas. That's the point right there, window of opportunity where the market is likely to bounce. That's the only one. Do you see how quickly we can identify that with a little bit of practice? Hey Lex, have a good one, man. Thanks for being here. If you need help with stops and targets, all you got to do is ask. I got you guys. So let's ask. It's 11:30. Alinsky, how you doing, man? Is it easier today than it was last week? Manprita, is it easier today than it was last week? Vatos, is it easier today than it was last week? That's all we want, right? Is this constant forward movement, this constant just recognition through repetition, guys. And here's the other part of that is you may see Ron taking these amazing trades and you're like, "Oh my gosh, how does he do that?" Ron started where you started. Gary started where you started. Everybody starts in the exact same spot. And then we all get to where we're going at a different. Oh, not able to work with Mac in parallels. I'm sorry. Well, Manprita, I'm sure that they've already told you. But when you get to that point to where you have a more workable computer, we'll just start your demo over, right? We'll start fresh and go through and get you to where you need to be. I love this picture, and I haven't shared it in a while, guys, so I'm going to share it now. Here's your path. And it's funny because it really is. It stands to be true for almost everybody. This was my path. This is where I started. I had my second spine fusion. I used to be in the restaurant industry. I was a general manager of a super popular restaurant in Texas. Um, and I had my second spine fusion. And my brother said, "Hey, you can't go back to the restaurant, so let's make a day trader out of you." And this is where I started. I was like, "Man, this looks like fun." And then about a weekend, and no, probably the first 3 or 4 days, I was like, well, shit, this is hard. I've got stuff to learn. Did anyone else feel that way in the first couple days? You're like, whoa, wait a minute. This isn't just all of a sudden I'm rich, right? But you sit in class and Mark says, hey, do me a favor, stick to the path, you're good, let's be okay. And right at about 30 days, you're getting your entries, right? You're getting some confidence. And guys, you're getting it because you're sticking to a plan. And right at 30 days, when I used to train managers, 30 days was the breaking point. 30 days, chef, as a chef, you probably recognize this. You get a new line cook and they follow everything perfect for 30 days until they get comfortable and then they start burning stuff and they start messing up recipes and they start doing things out of sorts, right? It's the 30-day stupid. And I hate to say stupid because you're not supposed to because everybody's so fragile. But the reality is right here you ditch everything that made you successful. You ditch your checklist, you ditch your advantages. Guys, right at the now I get it stage is 20 days in. And it used to be that at the now I get it stage, you blow out accounts and it costs you 5, 10, 20, 30, 40, $100,000. That doesn't happen anymore because now when you think you have it, guys, all you have to do is go to Apex and spend 35 bucks for a $50,000 account and test your plan and see if you really get it. This is where I lost 5 grand. I lost 5 grand in 22 trades over the course of a day because I had absolutely no idea what I was doing. And I'm sharing the path with you as honest as I know how. It's dejecting and it's frustrating and it's aggravating. And guys, it's demoralizing because you thought you had it and now you don't. Chef, you know how you started changing your entry rules today? Remember that? Because you're getting close to that 30 day. And we all do it and it's totally normal. And then we get to what's called the I don't know shit stage. Pardon my French. And this is the point to where we break our rules for a little bit and we're like, I feel like I'm starting over. And this is the most defining point in everybody's trading career, because this is where you know it's possible because you had success with the checklist. And this is where you have to come to terms with the idea that you abandoned everything that made it easy and it became difficult. And then right here is where you make the choice. This point is where you make the choice to embrace the path. Guys, this is where I decided to start taking pictures and participating in John Novak's class. This is the point where I started using the spreadsheet, keeping track of everything that I was doing. This is where I started annotating my charts, so I knew exactly what I was doing so I could avoid mistakes. And then you start this climb up, and it makes sense. And then you're surprised at what you did, and then you're there. And guys, everybody wants I did it to be closer than it is. And everybody's I did it point is at a different point. So if you're having challenges, ask yourself, am I keeping it simple? If you're having challenges, are you chasing more trades? Um, I've got people in this room that have checklists with 8 to 10 ideas on them. 8 to 10 rules for each trade. And they're looking for 5 different trades, which means at any given moment they're looking at their chart and they're trying to process 40 things. And they're missing trades, right? And they're getting in late. And they're mismanaging because each trade requires a different scenario. And guys, I'm telling you this because I've done it myself, because this is exactly what I did. This trading plan was designed because a gentleman called me one day. I don't remember his name, but he was a nice guy. And he goes, "Hey, Mark, I'm struggling. I keep trying to find trades, and I'm getting run over everywhere I go." And again, language is important. He kept trying to find trades. What he didn't try to find were advantages, were rules being met. He was looking for entries. He wasn't looking for rules met trades. And guys, there's a big difference between the two. So what we did is we refocused them. And that's where this KISS plan came to be. This is where that high probability trend trade checklist came into place. I said, let's try something different. Instead of looking for everything, let's look for one thing. So if there's anyone in this room that's been with me for longer than 30 days and you're not winning 60, 70%, give me 5 days on a high probability trend trade. Work on your patience bone a little bit. And what you're going to find is all of a sudden you're a genius again. All of a sudden trading isn't stressful anymore. All of a sudden you're not taking all those losers that eat away at the profits when you finally do follow your rules, guys. And then add in that 50-50 and keep it strict. And this has been the path forever. It really has. It's been the path forever. And we all deviate from it, and we all get to that final point at a different point. I can. Whoops. You're in Austin, D-Rock? I will be there on the 15th. We went traveling. We started our travels. We left Austin. I was living in Cedar Park, just on the north side. Um, and we're going to be back. I've got a house in Lago Vista for a month. Ah, I know right where that is, on the south side. We'll have to meet up for some barbecue when I make it. Which one? This one right here, Snorri? I love putting faces to names. The long? Snorri, is this what you're talking about? Cool, so let's do it. Let's go through the whole process together. Let's take our cheaters off. And guys, work with me on this one. What direction is the market moving? Are we in an uptrend or a downtrend? We're in an uptrend, right? So that's the first part of that's the first piece of the puzzle. Do we have odds favorable momentum? Absolutely. Do we have a clear path? Has price reached resistance, or is resistance still off in the distance? We have a clear path. So everything's cool on the large chart, right? The large chart says look for an entry. So on the smaller, faster chart, then D-Rock, your chart's better than mine today. I'm going to have to rebuild my workspaces. I haven't done that in a long time. Here's your reversal bar, Snorri. If this is the look on your large chart, now I'm going to say that because D-Rock had a fib that saved his bacon. Can we agree that this is the area inside of favorable large triggers? And this is the only area inside of favorable large triggers. Everybody give me a Y if you see that this is the one point where this market is likely to continue based on our rules. So my entry goes a couple ticks above it, right? That's it. And then I wait. Boop, 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 boop. And my order is filled. And I'm in at 51. And my initial stop, this is one of those times where 12 ticks is probably where it's going to be. I'm down there at 39 where the market shouldn't go. Is that what everyone did? Nice job, D-Rock. Way to follow your rules. Snorri, are you with me so far? Here's your entry. This would be my stop where the market shouldn't go. Pretty good, right? So before we do anything else, let me take a picture. Excuse me. So when we get into this trade, because I had odds favorable momentum, because I had a clear path, this is a trade that has the potential to win up to 80%, right? That's what we know. We know that this is a trade with these conditions, that this is my 70 to 80% trade. Would everybody agree with that? What does that mean? That 20 to 30% of the time, what happens, guys? 20 to 30% of the time, that stop is right there saying, hey, you know what? If the market doesn't do what the indicators say it's going to do, I'm going to manage my risk with a stop. And Snorri, this is one of those instances. You had a great entry. But the sellers decided to push it down. And Gary, if that's what your rules say, if your rules say with odds favorable momentum and a clear path and everything's strong, you wait for market flow, more power to you. Mine say get in at the area because the advantages are present. Mine say that mark without question, without hesitation, 100% certainty, you have momentum, a clear path, and an entry area. And because you do, your chances of success are right in that 70 to 80% of the range. And if I take this trade 100 times, 70 or 80 of them, I'm probably going to win. 20 to 30 of them, it's going to hit my stop. And guys, if it hits my stop, it's okay. It's a cost of doing business. Snorri, is that what you saw? Did you take the trade? So guys, here's the hardest part about being a day trader is learning to be okay with losses. Learning to be okay when the execution is flawless, meaning that you followed your rules. You have to be okay with the fact that every now and then, show me a picture of your chart, D-Rock. You have to be okay with the idea that you can't win every trade. That's the hardest thing for people to take in. If I have this look on my chart, I'm never missing it. Never. I'll take this loser without question every time. And guys, the same thing is if I have this look on my chart, this one gave me a management opportunity. They don't always. They're not always that nice. So, Snorri, if that's the way you read it perfect. And then price pushed all the way down to support, and there's your gap theory. It pulled it right back up. It was a 50-50. It was not a 50-50 on yours. It was wide open, right? Mine was wide open too. Guys, I'll rebuild all my workspaces tonight. There's a 50-50 on a pivot stop out. There's divergence on a 50-50 on a pivot stop out. There's a 50-50 on a pivot stop out not working after divergence prints. Pretty cool, right? It's just rules. D-Rock, you had a 50-50. So you took the easiest, odds favorable, nothing in the way, super, super solid, let's make money on the way up. And then when it became 50-50 with a divergence, you made the choice not to take it. D-Rock, does your plan work? Damn right it does. Guys, D-Rock's plan is no different than anyone else's. You don't have this fib, you have a fib at 89.70. So you were close. All right, guys, let's do this. We have a lot of people on different pages, right? A lot of people on different pages. Data corrupts over time. This is a great practice. Are you ready? If you're sitting in classroom right now, you're like, doggone it, mine don't look like Mark's and Mark's don't look like D-Rock's and everything's kind of wild and crazy. Do this afternoon. Start fresh. Everybody start fresh today. Snorri, are you comfortable on the computer? This really is an easy surgery, guys. You're going to get rid of all your workspaces. Just gone. And then once you get rid of all your workspaces, you're going to get rid of all your templates. Gone. We're going to wipe it. Clean slate. And that's probably it, D-Rock, is you're the only one that clean slated it today. And then once you do that, guys, all you have to do is rerun the indicators and you're going to start fresh. And D-Rock, that's probably why you're in the best situation. Because you did this morning and we didn't. This is a habit that I used to get into every weekend. Every weekend I would do it. I'd start fresh every weekend, come into the week with fresh charts, and I didn't this week. It was just a busy weekend. Didn't get an opportunity to. I think NT7, Alan. Oops, let me go to the resource page real quick. I believe John has NT7 right here. If you need to install NinjaTrader 7 and Nexgen indicators, here's a link for you. No worries. Let me drop it in the room, man. I'll save you a trip. And that'll get you in. D-Rock, I'll try that first. I don't know if you know anything about mechanics, but if you suspect that your alternator's broken, it's easier to just try a new battery first, right? So replacing it small before you go large. And guys, there's that 50-50 with divergences, and look what it does. There's those weak triggers into one-to-ones. It's ugly. Alinsky, if John does any sort of updates, you'll get it. So, man, I'm trying to think. When there was, I don't, to be honest with you, Alinsky, I don't think anything has changed in 20 years. It's been the same idea for 20 years. It's been the same looks. It's been the same rules. Visually, it may change a little bit. As software, NinjaTrader changes, right? We went from NinjaTrader 7 to 8, but the rules stayed the same. And one of the things is we realize that it's not broken, that it works. But if John finds a way, okay, so that would be John has programmers working on the DLL and the individual. So absolutely, as soon as it's available, what John will do is John will take every one of those fixes and he'll tell you guys to go run the indicators. He'll put them all on the indicators. So you'll be able to get the most current version. He also does this when contracts roll, so that you can just download the new workspace with the most current contract. If you're a brand new user, it keeps you where you always need to be. But honestly, Alinsky, no, it'll rewrite everything. So it's super easy. It's a 5-minute process. You're welcome. Um, John Novak is always looking for better ways to do things, but the next gen methodology He has pictures of trades from 2004 that are the exact same thing. Termination creates a full reversal gives you a pullback. But here's something that you guys that are new don't know about John Novak. HBNS syndrome. Anyone that's been with us for a while knows, and if you watch the traders chat room, John Novak never stops looking for ways to trade better. He never stops looking for patterns. He never stops looking for advantages. So he's happy, but he's never satisfied. He's always looking for a better way to do something. And it's a good thing because it does facilitate change for the good. But he also gets really excited about stuff. So when John Novak introduces something new, it's because he's gone back and done 30, 40 days of back testing going through it. And for him to actually introduce it, it has to create an advantage. But he'll always tell new users that two charts, and he'll scream it from the mountaintops, guys. Two charts and three rules is all you need. Two charts and three rules is all you need. Two charts and three rules. Simplicity. And the more you allow it to be simple, oh, dude, D-Rock, me too. I'm not that smart, guys. Um, I'm not a tech guy. I don't understand anything about the dynamics of the market that make it move. I don't know how John got these indicators to do what they do, but the one thing that I'm really freaking good at is reading indicators, and I'm extremely passionate about teaching you to read the indicators. Um, so the idea is it doesn't matter where you came from, right? You don't have to be a doctor to figure this out. I've had truck drivers change their lives with this, right? Oh my gosh, I have a buddy of mine owns a tattoo shop, learned how to do this, loves it. So simplicity makes it easy for everybody. Firefighters, because it's just patterns. Is anyone else my age, 50 plus? Lawyers? Do you remember Do you remember when you were a kid and Atari 2600 came out? And when they introduced games, there was always a pattern so that you would never die. Do you guys remember that? I don't know if they still do it with video games, but there was always a pattern that you could follow and you could play the game for 10 hours straight or until your parents kicked you off. So those of you that are in that generation, there you go. That's Nintendo. That's the one for Contra, right? Unlimited lives. I remember that one. The cool thing is that day trading is very much like learning that. Once you recognize the patterns, once you can repeat the patterns, it becomes much easier to find success. And if you remember when you were a kid and you were supposed to go left, but you go right and then you get eaten and you have to start over, like in Pac-Man. It's the same thing, guys. The patterns repeat themselves every day. All you have to do is get the repetitions so that you recognize the patterns when they set up. I've got a son that my oldest son has high functioning autism, and his life revolves around patterns. Everything is patterns. And once he gets a pattern, it's amazing. He wrestled in high school and he lost for 2 years. Literally won one match in 2 years. Hey, Tony, take care. And then he figured his patterns out. And once he figured his patterns out, he went to districts and he won. And he won all the tournaments outside of high school wrestling. And all he had to do was discover his patterns. So if you're brand new, all you're doing is discovering your patterns right now. And then once you get those patterns down, just repeat them every day, right? Don't try to be smarter than the patterns. Just let the patterns be what they are. And guys, that's it for today. You'll find that it's the same thing every day. You'll find that the rules don't change from day to day. The looks don't change from day to day. The methodology doesn't change from day to day. I will say the same thing every day. And if the way I'm saying it doesn't make sense to you, just do me a favor and raise your hand and give me the opportunity to rephrase, because I'll rephrase it a million different ways to make sure that you're comfortable. We're going to come back tomorrow morning at 9 a.m. and we're going to do it again. And then we're going to do it every day until you get to where you told us you wanted to be. If you ever have questions, guys, my email works. Feel free. You're welcome, Alinsky. I won't say who did it, but somebody asked me about one-to-ones on a smaller chart. I hope the answer brought clarity because one of the things that I'll do, and I'm going to say this real quick because everybody asks me for private sessions. I'll answer your questions via email, but you have to post in the room. Um, but what happens is anytime you ask me a question, guys, I always go back to the advantages. I always do. I always go back to which charts lead the way. Honest to goodness, there's no secrets ever, 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 ever. But if you need clarity, please reach out privately if that's easier for you. I'll always, dang it, Dwight, I was keeping you anonymous. But it was a great question. Those are the questions that we want in class because then everybody gets smarter. But don't be afraid, guys. My information's on the contact page. You can DM me in Discord. Just fair warning, my afternoons are typically super busy and I don't always reply the same day. So don't get upset. I'm not ignoring you. It's just kind of what it is. So that's it for me. Guys, go and